politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power. Live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From the wizards and capitals to new ventures and innovative investment, running a sports empire in Washington, D.C. is a monumental task. Owner Ted Leonsis trusts CFO Peter Bichet to execute monumental sports and entertainment's financial game plan.
We are definitely in growth mode. What else can we do? How do we grow the platform?
Watch Chief Future Officer, Wednesday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. The S&P 500 enters bull market territory, driven by tech-heavy gains. Investors question its sustainability as the bond market ramps up rate hike bets. Deflation risk. China's inflation remained close to zero in May, fueling calls for more stimulus, including rate cuts. And Donald Trump is said to be indicted over his refusal to return classified documents found at his Florida home. The former president says he's innocent. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Happy Friday to you, Kriti. Stocks going nowhere very fast, it would seem. But we have a bull market on the S&P, and the air is clearing in New York slowly.
It is. So perhaps some reason for a little bit of optimism, a little bit of kind of, well, literally clearing the air, Anna. But you're seeing that kind of sentiment show up in the equity market as well. A little bit of a pullback. Remember, we've had a lot of kind of focus gains, the S&P 500. Slight pullback in futures. You are only seeing it down about 0.1%, 42.94 on those contracts. But I got to say, it's all about the bond market. We are in the countdown to the next Federal Reserve meeting here, less than a few days away. The two-year yield, 455. So you are seeing a move about higher by about 4 basis points there. It's interesting, though, as we talk about potential rate cuts in Asia. We're going to get to that in just a moment. But also, a lot of these commodity-exposed economies talking about rate hikes. To what extent does the Federal Reserve going to have to rip a page out of the global central banking playbook? And, of course, that's going to affect the FX story. The dollar, stronger by only 0.1%, is really taking its cue from the bond market here. So as we start to see more volatility going into the Federal Reserve meeting next week, you are going to see the dollar follow as well. To me, Anna, though, the commodity to watch is gold, because that's really where you've seen a lot of volatility, first from the debt ceiling story and then from these rate hike bets. Look, if you're seeing more yields in the bond market, is there really a reason to hop into the gold market? That's going to be an interesting cross-asset story. 1962 on the precious metal, but that's just the Western economy bond market story. Then you go across to Asia, and it's a completely different dynamic. And I think that's worth revisiting because overnight we got some developments. Overall, some positive sentiment in the Asia-Pacific region. But if you look at the BOJ, they're saying, look, we're going to stick with our yield curve control policy. There was some questions about whether or not they would reconsider. They're saying, well, not just yet. Nevertheless, creating a little bit of weakness in the Japanese yen, 139.61 on that cross pair. But then at the same time, you have China really talking about kind of inflation that is going into negative territory. So deflation right on the horizon. The effect, though, is interesting because even with those kind of headlines, the commodity story is still quite positive. Iron ore and copper both in the green, Anna.
Yeah, really interesting to see that part of the commodities dynamic then, Chrissy. This is what we have for you on Europe. Really pretty flat picture, actually. And just as I look at it, other parts of the map turning grey right in front of my eyes. So we're really pretty flat here on the European session. It's been kind of choppy, a little bit of volatility as we try to settle into some kind of trading pattern for this Friday morning. Let me take you on and show you some of the highlights. I put UBS in my sort of selection of assets today, not because it's moving very far, because it really isn't, but because they've managed to do a deal with the Swiss government. This was something that was outstanding from their takeover of Credit Suisse. They have managed to agree with the Swiss government that the government will cover 9 billion Swiss francs worth of losses should they occur in the takeover. So that is of interest and sets the stage for more news on Monday when the deal could be done. As soon as Monday, we understand. Croda International is a chemicals company based in London, and their numbers came in below estimates. And they've also been talking about destocking by their customers. And so as a result, that stock down by 13%. And that really weighs on sentiment for the whole chemical space here in Europe. It is by far and away the worst performing sector here in Europe today. We've got the Turkish lira in focus once again going weaker at 23 Turkish lira to the US dollar right now. We've had a new central bank governor appointed, another markets friendly voice. This to go alongside the markets friendly finance minister that we now have. How much power will they really have, though, is clearly a question the market needs to continue to ask. But for the meantime, the market trading around this idea that perhaps the government steps back from some of its costly intervention policies in FX markets. And here's Brent crude. Chrissy, you were talking about some of the other dynamics in the commodity space. And here we have some buoyancy in Brent crude as well. Of course, we saw a lot of downward momentum in oil prices yesterday as a result of some of those news lines being reported elsewhere around Iran. So we'll keep an eye on the supply side, but also on that China demand story.
Yeah, well, speaking of the China demand story, Anna, the inflation conversation, a very different dynamic in Asia. Chinese inflation remained close to zero in May, fueling calls for more interest rate cuts to spur the economy's recovery. Joining us now is David Chu, who covers China for Bloomberg Economics. David, walk us through the inflation data. To what extent could we see China actually export deflation?
Well, I think China is on the bridge, at the edge of deflation. We cannot call it a total deflation now because the CPI itself is still positive, but it's very near to the negative territory. So, but on the other hand, I think it's still too early to call China's export of deflation from now, because if you look at what China experienced in the past several years, actually China's deflation or inflation did not export to the global market significantly. I think there is some mechanism here, but what we are worried is that the disinflation or deflation risk is emerging in China, so that we think there must be some policy support needed.
Okay, so we won't call it a deflation comeback, not just yet. Anyway, let me ask you about that policy support that you see as needed. Does this take us closer to intervention by the PBOC?
Well, people are talking about the potential PBOC easing since last week when the authorities called the big banks to reduce their deposit rates. And today's inflation data increased the chance for the PBOC to cover it. And actually, this recall me what happened in the year 2014 and 2015 when the PBOC cut the interest rate a lot. At that time, the picture was similar as now when we experienced the deflation in PPI and weak CPI. So now it seems similar, and but I want to say that the PBOC may also be concerned over the exchange rate. That could be a hurdle for the PBOC to make decision of easing. But we believe that the PBOC is going to cover it because it is similar as the 2014 and 15 experience.
Yeah, and of course, widening the gap with perhaps some of the more hawkish bets you were seeing around the world. David Chu of Bloomberg Economics walking us through that crucial global story. We thank you as always. And sticking with the U.S. consequences here, we're going to shift from economics to politics. Former President Trump said to be indicted over his refusal to return classified documents found at his Florida home. He discussed the developments in a video posted to his platform, Truth Social.
It's election interference at the highest level. There's never been anything like what's happened. I'm an innocent man, I'm an innocent person, and we will fight this out just like we've been fighting for 7 years. It would be wonderful if we could devote our full time to making America great again, and that's exactly what we did. But now, again, our country is in decline. We're a failing nation, and this is what they do.
Joining us now, Bloomberg's Rosalind Matheson, all over this story. Roz, walk us through the consequences here, the electability of the former president as we head into the 2024 presidential cycle.
Well, obviously this comes as Donald Trump is leading the polls, leading the Republican pack, going into the primaries to select their candidate for 2024. He's far ahead of the others, and he's been gaining momentum seemingly on the back of some of these various cases, including the civil cases against him, using it, you just saw in his video, as a rallying point for his base, saying this is all a conspiracy targeting me. I'm trying to focus on the important things for America, the economy and so on, and this is sort of dragging me away from that. That's obviously going to be his argument going forward. He likes to come out swinging on these things and play to his base. So the question is, does it continue to rally the Republicans behind him over time? If it does drag on and become particularly messy in the criminal sphere, does it mean that you see some more moderate Republicans draw away from him and towards some of the many other candidates that are in the pack, obviously, for the Republican nominee? And it's very early days to say that.
Yeah, how does this shake things up then ahead of 2024? Rosalind, let's pivot from Washington itself to transatlantic relations. Meanwhile, President Joe Biden met with the UK Prime Minister Rishi Sunak at the White House yesterday. The two leaders discussed closer economic cooperation.
Our economies are seeing perhaps the biggest transformation since the Industrial Revolution, as new technologies provide incredible opportunities, but also give our adversaries more tools for harm. But one thing I know won't change, I'm confident won't change, is the strength of our partnership, our friendship.
Rishi Sunak, the Prime Minister there, and Sunak leaves the US with some deals then, Ros, but not the big trade prize that his Conservative Party had promised.
Well, that's right, and expectations were probably low that he was going to get a lot of progress on the trade deal. It's very clear the US administration doesn't regard it as a priority at the moment, and certainly not through the US election campaign for Joe Biden, for example. But they have made it a centrepiece of what they see as their post-Brexit environment. We're free of the EU, free to do our own trade deals, and they want to get those done. So he did come back with some deals, of course, that, including for British companies to get access to subsidies, to get access to the defence market in the US. But this is nowhere near the broad kind of nature of a total FTA and the whole kind of free market that they want to get going. So certainly a disappointment that there's no signs at all from the US that they're keen to engage on that.
Okay, so we wait for further progress, see if it ever comes on that particular front. Ros, thanks very much. Bloomberg's Rosalind Matheson with the latest on US and transatlantic politics. Now we go from the world of politics to the world of crypto, as Binance US is being cut off from its banking partners after the SEC lawsuit that we covered earlier this week. Joining us now is the Bloomberg senior crypto editor, Anna Herrera. Anna, what does it mean then for Binance US? What's happening here?
Yeah, so Binance has not had an easy week, right? You said they were sued by the SEC at the start of the week. This means that in practice, like any client that wants to start trading on Binance US, their US platform will have to do so if they already have crypto, which means you can't take any dollars and start buying Bitcoin on Binance US. And clearly that reduces massively the appeal that they might have in the US. And it's an issue that Binance has been facing. Binance, the global platform, in many other places around the world, this issue with banking. They've seen a loss in banking partners in the UK, in Australia recently. So it's clearly like starting to become a big problem for them.
And certainly one that has kind of recurring consequences, especially when it comes to the relationship between banking and crypto, as you just pointed out. Why is this such a recurring problem, though, that dates back years?
Yeah, obviously, crypto has a bit of a problem with its reputation. In its early days, it was associated a lot with money laundering. buying drugs online. And so banks have been a bit wary of having crypto clients, because if you have a crypto platform as a client, then you're in trouble if they're not doing any anti-money laundering checks or compliance checks. And so they've decided to take an approach that is quite risk averse. And so crypto firms are struggling around the world to gain banking partners. And it's been a big problem. And now it's become even more of a problem because we saw the failure recently of Silvergate and Signature, which were two US banks that were targeting the crypto market specifically.
Anna, thanks very much. Bloomberg's Anna Herrera with the latest on crypto. Coming up on the programme, the S&P 500 entering bull market territory then as investors await more data and the Fed's decision. We will speak about markets with Matt Maley, Miller Tabak, Chief Market Strategist. Plus, in the auto space, GM joining Ford in the Tesla EV charging network. More on that still ahead. This is Bloomberg.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Yes. Not keeping, look, people have conviction, or they invest if they invest for the right reasons, just keep at it.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York alongside Anna Edwards in London. Look, it's official. The S&P 500 has entered a bull market. That means 20% gains from its October low. But look, the context is everything here, because one of the criticisms of this rally is that it has been very concentrated in those big tech-heavy stocks. You've started to see some of those small caps catch up a little bit, but then you got to factor in the Federal Reserve and the macro story as well. The idea that perhaps just as we're getting close to the consensus that the Fed may be near the end of its tightening cycle, the bond market ramping up some of its bets. And then you have to factor in the China piece of the equation, the growth story overseas, and how that's going to kind of feed through into the U.S. So with all of that to digest, are these gains really sustainable? Let's bring in a true expert here. Bloomberg's Valerie Teitel, our markets reporter in London, walking us through it. Valerie, connect the dots for me here. What does a stock market investor really need to be thinking about right now?
Look, I think they need to be thinking, where is this next leg of the rally coming from? Because if you look at what's priced in for the Fed, the market is still pricing in cuts later this year. I don't think it's going to come from a major monetary policy shift. Where it could potentially come from, Kriti, is this pile of money sitting in money markets. $5.5 trillion is now sitting in money market funds. It is a record, and you have to remember, when that money sits in the money market, it ends up sitting at the Fed's repo facility overnight. It's technically dead to the financial system. Now, why has that money been pouring in there, and what can make it pour out? It poured in there because these money markets, T-bills, for instance, are offering juicy yields at a time when the equity market is struggling. But now there's a good reason to think that the money could be coming out and chasing this equity market rally. I'm sure many people who felt like rock stars buying T-bills at 5% at the beginning of the year are now a bit upset they missed out on this 30% NASDAQ rally.
If the owners of those funds then make assumptions that the NVIDIA and AI rally continues, we'll see what happens with that then, Valerie. How do we square all of this with what we're seeing on the VIX? You know, this bull market achievement on the S&P coinciding with the VIX at the lowest that we've seen this year, I think. I mean, we get to lower and lower levels and people ask more and more whether this is really telling us anything.
Yeah, it's really plummeted in the last few weeks. It's now reached a level now back to the pre-pandemic lows. But look, I think it's telling us that the Fed's near the end of the hiking cycle. Growth and employment are still resilient, and core inflation is really set to deteriorate. It's this soft landing narrative where we're not going to get any major road bumps in growth as the Fed continues to fight inflation. And the fact that Washington can't spook us anymore with the debt ceiling debate. But I think the VIX trading this low is another reason why I'm not afraid to be long the equity market here and think that these returns can continue.
Valerie, when we're looking at the global data, though, where is the disconnect between perhaps some of the Chinese export data, the inflation data we're seeing overseas into the U.S. story? Why is that not being priced more aggressively?
Well, look, Critty, a lot of it arguably is. If you look at what's priced in the front end of the curve, the peak is in August in terms of where they think the Fed's funds rate is going to peak, and cuts priced out from there. So if we do get this disinflationary impulse from China in the way that it impacts goods inflation in the U.S., maybe it could help the Fed get back to its 2% target. But largely that's already priced into the market, which I think is one of the reasons why this bit of the Fed cycle, this end of the Fed cycle, has been so hard to trade when we have this influx, or this influx of where the Fed funds rate, you know, it's just ahead. Maybe we're not there yet, but it's on the horizon.
Are you convinced then about the link between deflationary forces, if we get there, in China and the rest of the world's inflation experience, Valerie? There's more in there than just that, isn't there? Even though we know the workshop to the world obviously does have a big influence. I mean, I know our colleague Mark Cudmore on the Markets Live blog was saying he was spending a lot of time thinking about the El Nino effect, what that does to commodities, shortage of commodities perhaps, and that then ends up putting inflationary pressure out there once again.
Yeah, that's something maybe to consider, but I think the bigger thing when we talk about China and its deflationary impulse is really this crisis of confidence that we're seeing in Chinese growth isn't just about the growth picture. It's where China's headed. Are they still after this export-led driven growth model, or is China perhaps okay with a lower rate of growth and okay with sacrificing that growth because they want to build an internally led consumption-driven economy? That kind of narrative, you know, it has been spooking a lot of foreign investors, but for the long-term picture of where global growth is headed, if China is definitely headed in some direction where lower growth, then we could see, you know, just a lower inflationary impulse overall.
Okay, Valerie, thanks very much. Valerie Teitel, our markets reporter, joining us there with thoughts on a number of market themes. And for more market analysis, check out MLIV Go. That's the function to use on the Bloomberg terminal to find the Markets Live blog. This is
source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on that folks are so excited about it. Climate tech is the hottest area to be in.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. Turkish President Recep Tayyip Erdogan has picked Hafiz Gaye Erkan as central bank governor. It's a move that may signal a return to more conventional monetary policy. A Goldman Sachs alumnus, Erkan has served as CEO at the recently acquired First Republic Bank and real estate firm Greystone. She'll be the fifth person to hold this job since 2019. The lira is trading near a record low as Turkey goes through an overhaul of the government's economic team. O'Day Asset Management is in talks with some of the world's largest investment banks, hoping to convince them to stick with the London firm. Several began distancing themselves from O'Day after new allegations of sexual assault surfaced against hedge fund manager Crispin O'Day. Morgan Stanley is cutting ties, while JP Morgan and Goldman Sachs are said to be reviewing their links with the company. O'Day CEO Peter Barton says the firm's lawyers are looking into the claims. UBS has sealed an agreement with the Swiss government to cover $9.9 billion of losses it could incur from the rescue of Credit Suisse. That clears a major hurdle to closing the historic takeover. The agreement covers about 3% of the combined assets of the merged bank. New Yorkers can breathe a little easier today. City environmental officials say the air quality improved overnight to moderate. Still, people are sensitive to pollution, still being advised to take precautions as well. New York's air quality index improved to 100 on a scale of 0 to 500 earlier today. The reading reached the most serious level of hazardous earlier in the week as smoke from wildfires in Canada moved across the U.S. Northeast. Anna, it's almost fascinating as a New York City local about just how prepared we were for something like this from a purely masking, working indoors, remote schooling perspective. I mean, today, for example, New York City schools will be doing remote learning just for everyone's kind of air quality safety.
Yeah, it really does shine a spotlight on perhaps the resilience that's been built into developed economies by the learnings from the COVID pandemic, the ability, as you say, to work elsewhere, to work remotely, to study remotely, and all the rest. I wonder where the politics goes from here, Kriti. A really interesting Bloomberg opinion piece by our colleague David Fickling, writing about the Australian experience. Wildfires back at the end of the last decade over in Australia, really changing the politics of climate change in Australia, or at least linked to changing that politics. Not necessarily in the ways you can predict, but really fascinating to watch that connection.
Yeah, absolutely. And something I think you're seeing more prominently in the U.S. in the California side of it as they deal with their own version of this crisis.
Yeah, coming up on the programme, we'll get back to the markets. Matt Maley, Chief Market Strategist at Miller Tabak, joins us. S&P 500 then back in a bull market. Does the breadth justify it? What happens if the Fed, will the Fed pause this month? Will they go back to hiking after that? We'll get to that conversation next. This is Bloomberg.
In the middle of a massive exhibition center located on the western suburbs of Shanghai, where the annual car show is taking place. This is the first exhibition after the end of the COVID lockdown. We can feel a lot of excitement on the ground. Electric vehicle is going to be the new theme of the industry. Most of the European companies and Japanese car makers who are considered latecomers to the China EV party are launching their EV products. They are making their foray, intensifying competition in the market. For example, Volkswagen yesterday debuting their ID.7, which is electric vehicle rivaling the likes of Model 3, which is one of the best-selling products in China. And Mercedes-Benz, they are announcing the launch of their new super luxury model of Maybach, which is going to be a fully fledged electric vehicle priced at $200,000 each. Domestic players are also trying to maintain their lead in the market. BYD, for instance, unveiled its first luxury model called Yang1 yesterday. It's priced at about 1 million yuan. At the same time, it's seeking to gain market share in the mass market as well. Needless to say, attracting all the car makers to the Chinese market is the rosy growth prospect. Demand is surging. By some estimates, EV sales in China are on track to exceed 8 million units this year from more than 5 million last year. The future of the car industry is EV. For sure, no question about it. This is Charlie Zhu, Bloomberg News, reporting from Shanghai Auto Show.
The top names at the Fed are on Bloomberg.
Right now, if you had to tip the scales, the next move is going to be an increase or a cut. It's pretty heavily weighted to the increase for me.
Nobody covers the Fed like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The S&P 500 has officially entered bull market territory driven by tech-heavy gains. Investors question its sustainability as the bond market ramps up rate hike bets. Deflation risk. China's inflation remained close to zero in May, fueling calls for more stimulus, including rate cuts. And Donald Trump is said to be indicted over his refusal to return classified documents found at his Florida home. The former president says he's innocent. I'm Kriti Gupta in New York with Anna Edwards in London. Anna, a lot of developments, I have to say, on the geopolitical front, certainly in the politics here stateside when it comes to the presidential cycle, but as well as a relationship that we have with the UK and others as well. But at the top of the agenda, it comes back to the core. What is the Federal Reserve thinking next week?
Yeah, absolutely. A lot of central bank decisions. Of course, the Fed central to it, but other central banks also next week. And we got lots of surprises this week, didn't we, from the Australians and from the Canadians in terms of the central banking fight against inflation and how that is still a focus and still in train. So is the skies clear? Just a little bit in New York. Are things looking clearer on equity markets? Well, no, not really. We're still flat here on European stocks. Just disappeared for a moment, but we're flat here on European stocks. You saw it briefly. We also have a focus on UBS today. We'll show you that share price in just a moment. That stock just edging a little bit higher as UBS managed to do a deal with the Swiss government. There was part of the deal left outstanding when they agreed to buy Credit Suisse. Here we have, it's back, up by 0.3% for the UBS share price today. And they've done this deal with the Swiss government that means 9 billion Swiss francs of losses will be absorbed by the Swiss government if it should be necessary as a result of the takeover of Credit Suisse. So that perhaps adding some upward momentum. We now wait for Monday, where we could see that deal being finalised at last. Now, Croda International is a chemicals business listed in the UK. The stock is down by 14.2%. Numbers quickly came in below expectation. They're talking about destocking by some of their customers, and that's weighing on that sector. So we have the chemical sector, definitely the weakest performer. We have utilities and real estate going a little higher, which is interesting when you think about interest rates. Brent crude is up by 0.5%, 76.30. But of course, we saw downward pressure on oil prices yesterday with all that reporting from elsewhere around what was going on with Iran. That supply side in focus, also the demand side, though, out of China in focus today.
Yeah, absolutely. And the demand thing that you were talking about, really having a read through, I think, into just how kind of cautious perhaps the equity market is going to be when it comes to those global growth concerns and inflation. Is it inflation that's the driver or recession that's the driver? Regardless, perhaps a little bit of kind of caution in the markets today, although I would say S&P futures not really showing much direction, but also not much momentum to the buy side either. 42.96 on those futures contracts. To me, it's the bond market that's interesting, Anna, as we talk about those central bank decisions from around the world. How much does the Bank of Canada, the RBA, and now other central banks as well, which have seen their rate hike bets increase, affect what you're expecting from the Federal Reserve? Nevertheless, the two-year yield higher by about 4 basis points, 4.55 on the front end of the curve. And the dollar really taking its cue from that story. The Bloomberg Dollar Index higher by, let's call it 0.1%. Again, taking the direction from what the bond market is going to tell us in the absence of any real kind of fundamental news coming out of the United States when it comes to things like its actual economics. Gold, though, is going to be interesting. As we talk about the yield ticking higher and higher, does it really pay to be in the precious metal anymore? 1963, does it still serve as that inflation hedge? That's certainly something we're going to be keeping an eye on, down about 0.1%, Anna. That's going to be one of the prominent conversations, at least when we talk about the markets, recession. But for market makers, to the world's largest investors, I want you to listen to what panelists at the annual Bloomberg Invest Conference had to say on the topic.
This is the best predicted recession that hasn't happened yet. And may not happen.
When capital reprices this aggressively, things do break. And we've seen some signs of that.
I think we will get a recession, but it might not be as dramatic and as sharp.
The investing and operating environment has changed so dramatically in the last 18 months.
If you want to paint a more cautious picture, you would say we might have a mini stagflationary scenario. If you have sluggish growth, 1% plus minus growth, and inflation doesn't really get down below 3%, and rates have to stay 3+% for a while, that's not going to feel, it's not going to be called a recession, it's not going to feel great.
Joining us now is Matt Maley, Chief Market Strategist at Miller Tabak. Matt, thank you as always for joining us, waking up early this morning. Walk us through this market here. We're kind of getting mixed messages when you're looking at the global data versus what the equity market, the bond market is pricing in. Let's start with the equity story. What is the equity market pricing in?
Well, I mean, part of it is just pricing in some of the excess liquidity we've seen in the marketplace in the last couple of months. I mean, people see the market go higher and they say, oh, geez, things must be getting better. But they really haven't been. I mean, if you look at the growth prospects you see, but initially we had that huge amount of injection from the Fed. We saw the Fed's balance sheet explode higher right after Silicon Valley Bank went under. So they provided some liquidity behind the scenes to help for that emergency. That helped the market. I mean, when was the last time the market rallied strongly on a banking crisis? Well, it's because that liquidity came in. Then we had the situation with the debt ceiling, where suddenly the Fed was no longer, the Treasury Department was no longer issuing Treasury securities. That helped with liquidity. And that, of course, that's going to start reversing now, where they're going to start issuing all sorts of, basically $1 trillion worth of securities. So that liquidity is going to pull back. And so I guess my point is, when you sit there, when you as you just talked about, Greedy, about what's going on in China, and then you see what we hear from on the side with the consumer, which is pulling in their horns, and then, of course, some of the lending, which is starting to contract, this credit contraction, are worried that the economy is going to be slowing going forward, and some of this euphoria we've had over the AI stocks is going to fade a little bit.
Yeah, so Matt, do you think that the S&P then in a bull market, it looks vulnerable now?
I do, and again, that's not the worst thing in the world. I mean, it's had this incredible rally, but you got to understand. It was interesting hearing some of the people you've had this week talking about the economy. Obviously, these leaders in the financial community talking about that. Geez, we could be heading for a recession, but it's not going to be as bad. Stagflation is a big concern, but the market is still quite expensive. We're at 19.5 times earnings, forward earnings on the S&P, 2.3 times sales. And, remember when we had the, in 2000 to 2003, we had one of the most mild recessions in history, and yet the stock market got clobbered because the stock market was very, very expensive at that time. Now, the stock market is nowhere near as expensive now as it was back then, but I just do think that it still has to come in, even if we don't have, even if we only have a mild recession.
We've had a reminder this week, a number of reminders, Matt, about the fight against inflation and how it is still live from Australia to Canada and beyond. Do you still go with the markets thinking that the Fed just doesn't like to surprise markets, so what is priced in is likely to happen?
Yeah, I definitely think so. It would be a big shock if the Fed raised rates next week. They have been very, very good about telegraphing what they're going to do. I mean, I guess they have left themselves a little bit of leeway if they really wanted to raise rates. But again, we did get that surprise, as you talked about, with Canada and Australia. But since they've telegraphed it in a certain way, if they want to send a more hawkish tone, they can have what they call that hawkish pause and really jawbone things a little bit. But I don't think they'll be raising rates next week.
What is the bigger concern for the Federal Reserve here? Are we still talking about inflation, recession, or is liquidity going to be more in focus next week?
Well, I mean, we still have to worry about the situation with the regional bank crisis. And the very good news is that it's not going to cause or at least doesn't seem like it's going to cause a financial crisis. So the financial system is not necessarily in jeopardy. But we are seeing that it is already starting to have an impact on what's going on in the economy and in lending. And, as Bloomberg was reporting yesterday, Howard Hughes Corporation wants to finance some apartment complex, and went to 48 different lenders, and nobody even proposed any kind of an offer, any kind of a bid. So we see that that's going to come when credit contracts, the economy ends up slowing down. So they want to keep a monitor to see how much. I think the most important thing for them is see what impact the banking crisis does not have on the financial system, but what it's going to have on the contraction of credit in the months ahead.
But Matt, how much of that story has already kind of been put in the rearview mirror? Are we concerned more about the contraction of credit or the Treasury issuance?
That's the problem, is that people aren't really focused on it because the market has done so well. So I guess my point is they're both issues. I'm most concerned about the contraction, the drawdown of liquidity that we're very, very likely going to see. That's going to have the biggest impact on the market. Longer term, I think it'll be what's going on in the market. Again, if what was going on right now, and people were talking about a mild recession, whatever, and we were trading at 15 times earnings, I'd be much less concerned. When a market's expensive, at some point, especially when the market's been pushed up artificially by these liquidity issues we've been talking about, I worry that once that starts to remove, and it's going to start being removed, as Stanley Druckenmiller said on Bloomberg this week, it's basically starting to happen now. And so I think in the weeks to come, it's going to be something that's going to be the most important issue to worry about.
Matt, thanks very much. Matt Maley of Miller Tabak, thank you for joining us. Coming up on the programme, we'll talk about the auto sector, GM following Ford's lead in tapping Tesla's EV superchargers. More on that infrastructure story next. This is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. we'll just have a rebalancing onto the continent. And actually the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. GM is the latest automaker that will be adapting its EVs to Tesla's superchargers, ensuring that it will become an industry standard in the US. Joining us now is Bloomberg's William Wilkes, who covers transportation and logistics for us and joins us now from Frankfurt. William, thanks so much for bringing us this story. So what's the broader significance of this move here? Anybody who's charged electric vehicles in many parts of Europe will know, there are a range of different chargers available right now.
I think that's the interesting significance of this, Anna, is that the EV manufacturers are moving towards kind of more standard equipment, and the world, the US and Europe need millions and millions of EV chargers, and I think company boardrooms are kind of deciding that, look, we need to come together and save costs and make this just easier for the consumer. There's still a lot of kind of concerns from consumers and drivers about purchasing an electric car, and the idea that it's going to be easier to charge, you'll be able to find your charging points in more places will make them more relaxed about buying an electric vehicle.
You know, it's interesting. In Europe, I feel like I see far more charging stations than I see here in the States. You see them in California a little bit, perhaps here and there on the East Coast, but really not widespread quite yet. It's coming at a time that not only follows the same announcement with Ford, but it's coming at a time when Tesla, from a car vehicle sales perspective, is competing with Ford and GM. Talk to us a little bit about the dynamic of kind of rivals turned friends.
Well, it's an interesting one. Actually, if you look at what Elon Musk has said in the past, some of it he's kind of said that one of his big missions is to just spur the development of electric vehicles. And quite often he's taken decisions that don't necessarily, from a ruthless kind of Tesla must win logic, don't always follow that logic. And I think in this case it's another one. Tesla are ahead on building charging infrastructure, and they're quite happy to let other car makers take advantage, use some of that infrastructure. And probably actually that will force the expansion of the electric vehicle market. So in the end, it probably does benefit Tesla, but it's kind of Tesla are letting other car makers kind of piggyback a little bit on this.
William, thanks very much. Bloomberg's William Wilkes with the latest on that, frenemies, I suppose, story from the auto space. Let's turn now to artificial intelligence. AI was on everyone's mind at this week's Bloomberg Invest Conference in New York. Here's what John Waldron, Goldman Sachs President and Chief Operating Officer, had to say about the emerging technology.
There's plenty of innovation that we could point to and say there's an enormous opportunity to have like another industrial revolution. It just might be more of a digital revolution and a science revolution. That could unleash a lot of productivity, but we need something to get more growth in the economy that will allow us to deal with some of the challenges we're going to face.
That's the investor perspective. For more on AI now, technology for text to image AI is growing fast with huge investments, and many industries such as healthcare and advertising are already using this tech. But early scientific research has shown that the tech is biased by creating images that perpetuate stereotypes. And this is the subject of today's Bloomberg Big Take story. Alex Webb joins us now for discussion of the main conclusions from this story. Alex, nice to have you with us. So I suppose anecdotally we've heard a lot about bias before, but this research actually suggests that the technology might be more biased than the world outside that it finds.
Yeah, it's a terrific visualization by our colleagues on the data team and the tech team. What they did was they used Stable Diffusion, which is a text-to-image generator, as you say, and they looked at 14 job profiles. They then asked the system to generate an image for each of those job profiles. They did it 300 times for each job. 7 of them were higher-paying occupations, 7 of them were lower-paying ones. And the higher-paying ones, you know, judges, politicians, CEOs, lawyers and others. Lower-paying ones, housekeeper, fast food worker and more. They found that the images generated for the higher-paying jobs tended to be people with lighter skin and more likely to be male. And then lower-paying jobs, darker skin and more likely to be female.
So, Alex, what is the effect in terms of it feels like it's perhaps detected early enough to do something about it? How is the industry going to tackle that?
Well, this is part of the challenge, that the acceleration of this is, you know, slightly terrifying. Something needs to happen sooner rather than later. The thing that's fascinating about it is it isn't just sort of reflecting existing stereotypes. It potentially exacerbates them. One interesting data point the story pulled out was that 3% of the images created of judges were of what are perceived, at least, as women. But in the US, 34% of judges are women. It really is a far starker difference. These images are already being used, these kinds of image makers, I should say, are already being used in the advertising industry. So again, we're perpetuating potentially stereotypes if they're used without any sort of checks and balances. And also, there are police forces that might use AI-generated images when searching for potential criminals. And again, we have a similar problem.
Okay, what are companies doing to push back against criticism here? I suppose they're doing something.
Yeah, so Stability AI, which is the company that makes Stable Diffusion, says for its part that all AI models have inherent biases that are representative of the data sets on which they're trained. They are open sourcing their models in an effort to let the AI community help them improve this bias evaluation techniques and develop solutions. There are other companies that are also working on ensuring that if they get images from something like Stable Diffusion, they can analyze them in a way that eliminates bias. So there are several different steps along the way that people are working on to try to improve the situation.
Alex, thanks very much. Bloomberg's Alex Webb on this fascinating Big Take story. NI Big Take, if you want to find that on the Bloomberg terminal, or you can find it on the Bloomberg website. Coming up on this program, Japan reviving its chip ambitions with a TSMC factory. More on how it will impact the global supply chain next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. TSMC will open its latest high-end factory next year in a region in southwestern Japan. This is a critical piece of Japan's one last push to resurface as a world chip superpower amid escalating U.S.-China trade tensions. Bloomberg's Stephen Engel reports on how this new chip fab affects the global chip supply chain and what this change means for Kumamoto.
The global supply chain for high-end semiconductors will soon take a significant turn through a sleepy yet suddenly revitalized southwestern Japan. The world's largest chip maker, Taiwan Semiconductor, next year will open its latest high-end chip fab, a more than $8 billion behemoth in Kumamoto Prefecture on southern Kyushu Island. Strategically located not only because of where it sits geographically, but because, well, it's not in Taiwan. Warren Buffett's Berkshire Hathaway recently divested its entire stake in TSMC, largely because of the threat of China taking over Taiwan as U.S.-China ties deteriorate.
We're not looking to decouple from China. We're looking to de-risk and diversify.
And that's where Japan steps in. Once a world leader in chip manufacturing, Japan has lost market share to regional rivals, South Korea, Taiwan, and mainland China. The Japanese government wants to reverse that, aiming to triple made-in-Japan semiconductors and related materials to $113 billion by 2030.
Kyushu was once called Silicon Island, home to many semiconductor companies. The Japanese government hopes that this Silicon Island can be reborn in the future, and I want Kumamoto to be the center of that.
Taiwan Semiconductor is not the only major chip maker to consider expanding capacity here in Japan. Fumio Kishida, the Prime Minister of Japan, invited the heads of major chip companies, including TSMC, but also IBM, Intel, Applied Materials, Samsung, also Micron, to the G7 meetings to try and lure them to invest more in Japan. Friendshoring of the global chip supply chain is how some Americans call it.
Friendshoring is about deepening relationships and diversifying our supply chains with a greater number of trusted trading partners.
Hence, TSMC is also building new fabs in the United States and plans another, possibly in Germany.
I do think this attempt by Japan to bring in the semiconductor industry from around the world is quite significant in terms of not only the economy, but also in terms of strengthening economic security.
For once moribund regional economies like Kumamoto's, the flood of new investment feels like a much-needed transfusion.
The recent population growth and rising land prices in industrial areas are among the highest in Japan.
Near the TSMC construction site, other major companies are renting rooms for 200,000 yen, an unheard of amount in that area.
Adding to concerns about resource shortages and worsening traffic. And yet, after decades of diminished global supply chain relevance, these are problems and new jobs remote Japan may actually welcome. Stephen Engel, Bloomberg News, Hiroshima.
Fascinating deep dive there into TSMC and its plans over there in Japan as alternatives to Taiwan are sought. Really interesting that the EU just this week, just yesterday in fact, approved 8 billion euros of funds to go into chip research in Europe, Chrissy, and this will add up to about 22 billion if you add in the private sector money that's coming in as well, because the Europeans, of course, have their own ambitions. The EU wants to produce 20% of chips on the global stage by 2030. So lots of countries setting those ambitions for 2030 around friendshoring, around securing their supply chains.
And those incentives absolutely working on a lot of these American companies, Intel, even Global Foundries, for example, really taking these governments up on their offer. To me, Anna, the story really is how quickly the diversification is coming with this threat on Taiwan.
Yeah, really interesting move by Warren Buffett, really focusing attention on that subject if we needed it around the geopolitics. That is it for Early Edition. Surveillance this Friday is ahead with Kathy Jones of Charles Schwab, Binky Chadha of Deutsche Bank and Andrew Hollenhorst of Citi. Plenty more to come then on this Friday. This is Bloomberg.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with their head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
You have excess savings dissipating by the end of the year. You have student debt payments coming back. And so we think it's a consumer that looks a lot weaker by the end of this year.
We're in a world with higher inflation, and we've reset.
One conviction view that we have is this higher for longer narrative globally.
I'm still optimistic that the market is going to move higher by the end of the year into next year.
Ultimately, if you do go into a recession, bad news is bad news.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Let's get you to the weekend, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keane and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market slightly negative on the S&P 500 after closing yesterday more than 20% higher from the October low. TK, some people might say we're back in a bull market.
Back in a bull market, and it feels that way. I mean, you see a little bit of red on the screen and we get a bid come in. And you saw it in the opening montage there with Ed Yardeni at 4,600 and Anthony Dwyer over at Canaccord at 2,200. The bottom line here is the debate is raging into this June weekend.
Big time. Q1 into Q2. Michael Hartnett of Bank of America saying this. We've gone from recession fear to Goldilocks greed. He's very keen to point out that when you strip out the big seven, where all the performance has been on the S&P 500, the S&P year-to-date, Lisa, is down 1%. That's the quote this morning from Michael Hartnett.
Does this mean that it's more fragile, or does this mean it's just beginning? You talk to 3 strategists, you get 6 opinions. There's a question here about whether this is a bull market, whether this feels like one, or was it doesn't at all. It's just basically 7 stocks that are pulling everything along. And here we're looking at, potential Goldilocks greed. Yesterday, we actually saw broadening out with respect to the gains. Is that indicative of something that could potentially continue, or the end?
It's a Friday in June. Your first data point, John. The VIX is at 13.76. Why do we feel so miserable?
Kit Duke, SocGen, my favorite quote this morning. Have we all become ostriches with a short-term memory of 10 seconds and a tendency to head off in one direction or another at full speed for reasons we can't remember?
Can we celebrate?
Celebrate what?
It's all clear on the Manhattan front.
Less smoke.
It's
Can
just
you breathe
way
again?
less. Yeah, it's been sport. And, I'm in a 6th floor walk-up. I really can't see off into the distance.
See the sky, TK.
But, it's like better. In Philadelphia was worse. It's better. And there's firefighters at real risk here trying to get this fixed. And Rob Carolyn says the low's got to move off Nova Scotia. Hey, it's better.
It's better. Let's hope it continues.
It's a bull market view of Manhattan this morning.
That's the bull market view of the
We only have optimists on today, right?
I think so.
Okay, good.
Stuart Kaiser, Vicky Charter at Deutsche Bank a little bit later.
Yeah,
he thinks this
go.
S&P. He thinks this S&P can get to 4,500. 4,500, not 5,000. Let's get to the price action on the S&P 500. Equity futures just a little softer, negative here by 0.1%. Looking to close out the week maybe on a softer note, but yesterday closing out the session on a very big note, a bull market. For some people, Bramo, I know some people hate that term, 20% off the lows in October, but ultimately other people will call it what it is.
We're going to have to call it that because that's what everyone's calling it. And frankly, it highlights just how much of a rally we've gotten. Today, I'm not going to really try to spin this any other way. It is a very slow Friday heading into an incredibly busy week next week. Today, some of the things we're watching, ECB Vice President Luis de Guindos and Supervisory Board Chair Andrea Enria are speaking at different events. This comes ahead of next Thursday's ECB meeting. Very curious to see whether their tone is shifting after the Australian Central Bank and the Canadian Central Bank. 4:30 p.m., the Fed is releasing the H8. I watch that every week. It is a report outlining the assets and liabilities of commercial banks. The reason why I care. This is deposit flows. How much are people starting to accelerate this pace of deposits out into money market funds? They're giving about 5.5% at this point. And tomorrow, French Open, tennis women's singles final in Paris, Belmont Stakes in New York, and Man City is taking on Inter Milan at the Champions League final.
This is the new Bramo, the sports report with Bramo.
There we go. Bramo's got into football this season. I have to say, looking forward to the final over the weekend. As for the French Open, a little bit later this morning, 8:45 Eastern Time. Bit of counter-programming here. I'm announcing for the other side. Alcaraz Djokovic. What a tennis game. What a tennis matchup. Taking place a little bit later this morning.
It's great. I mean, I just a quick story. I stumbled upon it when I was 15 years old, and that color of green is seared with me forever. There's that certain French Open Roland Garros
against the
green.
red clay.
Yeah, and it was just like I literally stumbled on it walking by. Oh my God, that's it, and it's still that they've kept it.
Roland Garros gets your attention. Beautiful thing. Thanks for the story,
You should
Tom.
see me with a tennis racket in
beautiful.
my hand.
I bet. Just great.
People fall over.
Epic
the
court
laughter.
coverage.
Epic court coverage.
Stuart Kaiser with us, trying to keep it together. Had a US equity trading strategy over at Citi. Stuart, good morning.
Good morning.
Can we talk about the character of this rally off the lows in October? A lot of people might say it's just driven by 7 big tech stock names, the rest of the market dreadful. What's your analysis around the character of this rally?
Good morning. Look, it is obviously clearly generated by a pretty narrow group of stocks, but I think what you're seeing essentially is there's a scarcity of growth in the market, and the market is willing to pay a premium for that scarcity of growth. And there's a narrow group of stocks that offers that growth, and as a result, those are the stocks that have performed the best. So I think, it worries us a little bit less just for that reason. If you look at what's worked this year, it's companies that have positive EPS momentum, so companies that are revising higher. Tech clearly falls into that category, because of AI and various other drivers, and they've been rewarded for that. So I don't necessarily think it's irrational. I think, what Lisa mentioned earlier is what gets it to broaden out and turns this into something that is maybe a little more durable and sustainable to the upside. So that's the debate, I think.
You and David Bale and the Citigroup team across all the broad platform have been hugely, you got to be in the market. Ambrose Evans-Pritchard today in the Telegraph writes a blistering from China to England essay on what he perceives as the coming disinflation. What does the U.S. stock market do if we get disinflation like Ed Hyman and David Rosenberg are talking about?
I think initially, the market responds positively to that. Coming into the year, you had two big tail risks out there. One was hard landing growth. That's clearly either not happening or has been pushed into the future. And the second was inflation getting sticky at a level that was uncomfortable for the Fed. So I think if you got some downward momentum in inflation, it lets the Fed back off, it lets interest rates come in a bit. And I think that also kind of releases money into the market. To Lisa's point, you're earning 5.5% in cash right now.
Lisa, it's almost a societal sigh of relief. If, depending on the level, Japan's at 4% inflation, they get to 2%. It's like a breath of fresh air.
If we get there, right? And that's, I think, one of the questions, especially on the way, as people don't really have an edge on this whole debate about whether we're going to get there or not. And there's been a lot of conflicting data about whether the economy is resilient or whether we're really seeing signs with yesterday's claims data that it is rolling over. What are you looking for to sort of give you conviction that this is the beginning of something more durable versus a head fake?
Look, I think it ultimately goes back to the labor market, most likely. The labor inflation is what the Fed is most focused on, so that's the key to that inflation tail risk. And it's the strength of the consumer that, would probably drive a recession. Our economists think if you do get a recession, it is more consumer-led. So I think you need to focus on labor market data and wages in particular. Look, if there's a scarcity of growth in the market, then how do you resolve that? You have more economic growth, which drives more earnings growth to a broader number of stocks and allows people to invest in a broader number of stocks. So I think ultimately this is opened up by the timing and sort of depth of a recession if you get it. And frankly, I think labor market data is the key to that at this point.
So given where we are, what are you doing? Are you fading this or are you leaning in?
Look, we've become a little uncomfortable with the tech trade. It's a thing we've been pretty bullish on all year. As I mentioned in the past, we just don't see any really compelling alternatives to that right now. So I think we're reluctantly, staying in the tech trade until we get some evidence of that growth improvement. I think if you look at what most institutional investors have done this year, coming into 2023, the view was you have a recession in the U.S. Some thought that was going to be in the first half of the year. So they're in this very conservative portfolio. And the question is, what gets them out of that? Is it price action? I think probably not. I think, price action may force faster money into the market. But, your long-only community is not going to allocate into cyclicals if they still have a recession out there in the visible time horizon. So I hate to say it, it all comes back to growth, in my opinion.
You're raising the right questions. I think you provided market analysis and we followed it up with a conversation about the economy. The market's not the economy right now. How do you divorce this broader conversation about economics, disinflation, the Federal Reserve away from what's happening at the top of this market and just accept that narrow leadership can be okay and maybe last longer than you think?
I think it gets back to a scarcity premium, frankly. Look, there are investors that have to be invested in the market, right? And I think what the market investors are telling you this year is if I've got a recession potentially on the horizon, and I've got 5.5% cash yields, then there has to be a really good reason for me to own a stock, right? There has to be a very good single stock story, or there has to be an underlying sort of macro or structural trend. And what we've seen really is money go into three sectors this year. It's industrials, it's healthcare, and it's tech. Industrials, there's a number of well-known kind of medium-term themes, Inflation Reduction Act being one of them, and defense spend. Tech, you have AI. And healthcare, frankly, is large cap growth. So those are the three areas where people are saying those sectors clear the hurdle for me to put money into cash. And I think that's why we're seeing the breakdown of performance we are.
Where's your S&P target then? How do you readjust that? Help me with your Monday morning equity note here. Is there a tendency to adjust higher?
Look, Scott Kroner is our U.S. economist, U.S. equity strategist. He's at 4,000 for year end. He believes that's, fair value with a range of, call it 30.
It's fair value, but the market's not pricing fair value is a wide belief right now.
Yeah, and I think, look, there's obviously a confidence interval around that. And I think when you're at 4,200, you're at the top end of that sort of confidence interval band. And when you're at, call it 3,800, you're at the lower end of it. So I think what you're doing here is you're saying when you get to 4,200, your risk reward is fairly limited. And I think you have two choices to make. One is you go all in on the cyclicals rotation, or two is you find ways to stay in large cap growth, and maybe you do that by avoiding some of the largest stocks, like NASDAQ equal weight, for instance. You're still like a heavy tech exposure, but you're not trapped in 5 or 6 stocks. So, people are getting creative. Sometimes creativity, what do they say? Desperation breeds innovation. So, maybe that's
the desperation there? Are the people at 35, 3,600? How desperate are they into this weekend?
I think there's pressure there. We're seeing pressure in tech. You can see that in the option space. Skew is inverted in a lot of stocks, i.e. the call is more expensive.
What about the skew of institutional investors that have missed this October rally?
Yeah, I said you're seeing that in tech, and you're seeing that in S&P options as well. Zero-date options is a big theme in the market. For the first time since February, zero-date call options outnumber zero-date puts. So there's definitely pressure on the institutional community, particularly through the option space, because I think people are a little hesitant to put, the full cash to work at this point.
Not just a huge deal, Tom, it's the deal.
Better said.
Going into summer, you're trapped in cash. It paid you 5%. It looked good at the start of the year, and then you realize what you missed.
I defer to Mr. Kaiser, but my basic feeling is the middle of June feels like about October 15th in a normal year. And it's like, OMG, I'm this far behind. I don't own Apple, Nvidia, some of the, not the 7 stocks, but I don't own the top 20 stocks. I'm in trouble. What do you do? Buy calls.
I think that's right, too. And, a lot of people that actually got that trade right are now wondering, what do I do with my money now? Like, do I sit in this stuff and let it ride, or do I need to get out of that?
Come on.
You hedge the people sitting in cash.
You hedge the triple leverage all cash ETF. You hedge it.
Sell it to TK.
You pick up 17% gross yield after a 2.20 payout.
Hey, Stu, this was great. It's good to see you, mate. Stuart Kaiser of Citi. Coming up on this program, the former president charged over secret documents. We'll catch up with Terry Haynes of Pangea Policy, and an upgrade on Tesla from guess who? Dan Ives of Wedbush. New price target, 300. That conversation just around the corner.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. New Yorkers can breathe a little easier today. City environmental officials say the air quality improved overnight to moderate. Still, people sensitive to pollution are being advised to take precautions. New York's air quality index improved to 100 on a scale of 0 to 500 early today. The reading reached the most serious level of hazardous earlier in the week as smoke from the wildfires in Canada moved across the U.S. Northeast. Tesla shares are poised to rise for a record 11th consecutive session, matching the stock's longest winning streak set in January 2021. Now that after General Motors said it would adapt its electric vehicles to Tesla superchargers. It follows a similar move from Ford. Tesla shares have risen more than 90% so far this year. UBS has sealed an agreement with the Swiss government to cover $9.9 billion of losses it could incur from the rescue of Credit Suisse. Now that clears a major hurdle to closing the historic takeover. The agreement covers about 3% of combined assets of the merged bank. Bank of Japan officials see little need to adjust its yield curve control program. Bloomberg has learned that a move is unlikely at next week's policy meeting, given improvement in the functioning of the bond market and the smooth shape of the yield curve. According to a Bloomberg survey, nearly all economists expect no major policy shift at that meeting. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
I'm an innocent man. I did nothing wrong. And we will fight this out just like we've been fighting for 7 years. It would be wonderful if we could devote our full time to making America great again. And that's exactly what we did. But now, again, our country is in decline. We're a failing nation. And this is what they do.
The former president on Truth Social, President Donald Trump there, indicted over his refusal to return classified documents found at his Florida home. This according to 3 people familiar with the matter. TK, truly extraordinary.
It's extraordinary, and it's very opaque right now. I love what Lawfare Blog did this morning, Scott Anderson and Ben Wittes. This being Lawfare and not cable news, we are going to wait until there's an actual indictment. That's what the adults will do. They will wait to see the actual indictment.
Yeah, my lead there, Tom, based on our reporting that according to 3 people familiar with the matter, this is happening. Yes. Most other people reporting the same thing. You can see based on how the president's responded to it in the last 24 hours or so. And TK, I think one thing to watch going into the race for 2024 is how the other Republican candidates in this field respond to it as well.
Oh, no question about it. But the heart of the matter is these are federal charges in Miami and of huge import. Again, Tuesday's the day, right, John?
According to reporting,
some summoning is the phrase. What we're going to do is talk to somebody who has an immense respect for legal pros on this. Terry Haynes is founder of Pangea Policy with decades of duty on Capitol Hill. Terry, you know, I go to Lawfare like everybody else because these guys are the adults in the room, and they say wait for the document. What are we waiting for?
Well, we're waiting to see what the actual indictment says and what the charges actually are. You know, you and John are absolutely right. You know, there's a lot of, 3 sources say. And, the former president wasted no time not only in getting out there and talking about it, but one thing I found significant was the first fundraising email showed up at about a half an hour after made that announcement. So, there's clearly an attempt by him not only to frame this thing before the indictment, whatever it is, comes out, as well as raise money and gin up his followers.
Terry, my experience here goes as far as Perry Mason, maybe Law and Order. So you're going to help us right now. To me, there's a massive distinguishing feature between state courts in New York or any other state for that matter, and a federal court anywhere, in this case in Miami. What is the state court versus federal court distinction for the former president?
Well, it's a couple of things. One is the sorts of offenses. I mean, there are things that are exclusively federal offenses, and you have in the Trump case, you have not only documents but kind of also investigations about January 6th matters. A lot of the state court matters have to do with things like his business and whether his business records were on the up and up, the tax evasion matter that they went through in Manhattan, those sorts of things. But also one of the cases, which is a Georgia case, possibly has to do with whether or not he interfered with Georgia state election law as a result of the January 6th matter, asking Georgia officials to find him votes, that sort of thing. The matter really is kind of civil versus criminal, and it also has to do with the degree to which the former president can be punished, either by incarceration or fines or the like.
Terry, John picked up on the right point here, which is how do the other Republican potential candidates really step up and respond to this? Do they embrace the sort of deep state conspiracy, or do they say this just shows he's not fit to run?
The answer is, Lisa, is both. They have to attack Trump head on. I think you'll see an intensification of what I call the pack swarm mentality, where the pack of these candidates all talk about Trump's unfitness to run and how he's not the best person and why. And at the same time, they hedge their bets a little bit by raising concerns about the justice system. And there are questions, unresolved questions, about not only whether or not the potential indictment here is different treatment. I mean, remember, Trump's not the only person that's took records home with him. That includes his vice president. That includes the sitting president, potentially others. But also, there's kind of a broader historical question about how these laws were enforced. And President Trump is trying to make a case that both there's different treatment here for him, as well as a situation where these laws were never enforced in the way that the Justice Department is proposing to enforce those laws. Those are both questions that the Justice Department is going to have to answer as this case moves forward.
Terry, you mentioned that the fundraising emails went out right after the announcement by the former president. Does this type of issue have the same resonance with voters that it used to?
Oh, I think it has resonance. You notice in the Trump statement, he's pushing the buttons about, they talked about the Russia hoax and that was wrong. They talked about this, that was wrong. That was wrong. Now he refers to this as the boxes hoax. So he's trying to gin that up. What I will say on the primary battle is that, forget about the national beauty contest. If you look at the early states, you've got Trump about 40% in the field, about 60%. And I think that what happens is that a lot of these candidates really kind of combine to take Trump down, and at the same time appropriate the policies and say, hey, look, I'm your safer alternative.
Terry, it's so messy down in Washington, D.C., as you know. I just wonder how much pressure will build now on House Republicans to push up their investigations into the sitting president. How much pressure is going to be on them to do that now?
Oh, I think there's no pressure on them. I think they put pressure on themselves to do that, frankly. One thing I want to say here is that just because Trump, I think, is less likely to become president as a result of all this doesn't mean that Biden's more likely to become president. One reason for that is that those investigations, I think, intensify and ramp up. The other reason is, should an alternative to Trump emerge, and we're really not going to know that for 6 months or more. I mean, but if the Republican nominee isn't Trump, that person is better able and better capable of putting Biden on the back foot on policies as well as his health and his age. So this isn't unalloyed good news for Biden by any means.
Terry Haynes of Pangaea. Terry, always appreciate it, sir.
Brief, sir.
Thank you, sir. Just fantastic. A couple of headlines dropping in the last 10 minutes or so. I think you can file this firmly under the category that is things you never want to say as the CEO of the business. Sergio Ermotti of UBS this morning, of course, the former CEO, now the new CEO and current CEO of the business, overseeing the tie-up between UBS and Credit Suisse, securing that Swiss government guarantee of about $10 billion for losses if they incur them. Sergio Ermotti saying this morning that most of the staff at Credit Suisse are, quote, good people. He wouldn't comment on the job cuts, but Tom, I'd say for Sergio Ermotti, a little bit clumsy there with the language to say that most people at Credit Suisse are, quote, good people. Most people
Another endearing quote, the next few months will be bumpy. That's quote, will be bumpy.
Yeah.
What a mess. And again, it's a domestic story as well with the Swiss government involved. The $10 billion number waltzed by yesterday as some form of guarantee. I'm not up to speed on it, other than to say this has many different fronts besides the usual Bloomberg, Continental Europe, bank talk. There's a lot more going on here than that.
Way more, just to see how this drama plays out. It's more than good people. We know
Lisa
some of those good people over at Credit Suisse.
Tom and John, they're good people. She said that.
We're good people.
We're good people.
Will you stand by that on the record?
Absolutely. Some of us are good people. No, kidding.
Some of us are good people.
I will just say, going forward. Yes, carry on.
The offspring, can we say that the offspring are good people?
Some of them are good people. I'm not sure if we can categorize all of them.
Selenios is a good person. She's going to join us shortly of RBC on foreign exchange. Looking forward to that conversation. I promised you that call on Tesla from Dan Ives of Wedbush. Musk and Co are playing chess. The others are playing checkers. The price target goes to 300. 234 is where we trade at the moment on Tesla. The latest news, of course, is that Mary Barra of GM joining Ford and their announcement over the last month to use Tesla's EV charging network. And we're going to have an industry standard potentially here in the United States, Tom, and it's going to be driven by Elon Musk and Tesla.
It's needed. From what I don't know anything about this other than to say everyone I know that has an EV says this is a huge starting point deal.
This morning it feels like everyone wins. Tesla up by 4%, GM up by 3.5%. Live from New York City, this is Bloomberg.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Yes. Not keeping, look, people have conviction, or they invest if they invest for the right reasons, just keep at it.
A lot's happening on Wall Street.
There are so many factors that play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From business's most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Let's get you to the weekend. Equity futures on the S&P 500, just a touch negative on the S&P, softer, lower. We're down by 0.1% there. on the benchmark in America after closing back in a bull market, up by more than 20% from the October lows and heading towards a fourth week of gains. That's the longest weekly winning streak of the year so far, potentially, on the S&P 500. The Nasdaq actually down slightly on the week so far this week, up slightly this morning by 0.05%. The front end of the curve absolutely whipsawed in the last 48 hours or so. On the one side, by a surprise rate hike from the central bank in Canada, that pushed yields higher. Then yesterday, yields pushed lower by some disappointing jobless claims data. Disappointing is an important word because it depends who you're talking about here. Disappointing if you're on the wrong end of the labour market right now and claims are higher. Perhaps this is what the Fed wants to see, though, TK. RBC Blue Bay out this morning looking for a 25 basis point hike next week from the Federal Reserve. Due to inflation pressures, they're not alone. I'd say this is an out of consensus call, but they're not alone. Andrew Hollenhorst of Citi, another, who thinks they move next week.
And subject to adjustment, I believe it's Tuesday when we have a CPI report where everybody's going to adjust rapidly to the 24 hours ahead as well. I like the data check there, John, because it really captures the equity lift that essentially no one believes in. The negativity out there, the comfort in cash out there, granted with a big yield, is substantial. I think I can honestly say I've never seen so much doubt at 13.76 VIX, 4,300 SPX, getting on 34,000 Dow. NASDAQ's a moonshot. This is the strangest Friday in ages.
Hey, Tom, it's a tanker full of pessimism fueling this market, without a doubt. Just leaning against that. I just want to finish on the FX market and the euro. Guy Johnson and I were going back and forth on this yesterday. It's a really important conversation. In Europe, we've had the stagnation in the economy, and it didn't bring inflation lower in a pronounced way. That's really, really important when we're talking about the Federal Reserve and this idea about what is sufficiently restrictive. How much does this economy need to slow down before inflation starts to fall well towards target? And Guy making a point yesterday, and it's a good point, it's an important one, that in Europe you had no growth in 4Q, no growth in Q1, negative growth in both of those quarters, and inflation is still a problem.
Yeah, it is. And what's important here is a parsing of goods dynamics versus service dynamics. And the answer is there's some serious goods disinflation going on. And we're going to look at the litmus paper of the system right now within equities, bonds, currencies, and commodities. There's nothing deeper than the foreign exchange market. And of course, it does link into politics. Elsa Lingos joins us now, Global Head of FX Strategy, RBC Capital Markets. Elsa, thank you so much for joining. It's just real simple. Can FX provide an indicator if and when inflation breaks? Can FX get out front and predict a disinflationary trend?
So FX is an interesting one because it feeds into it both ways. It's a forward-looking indicator, as you say, but then also it has an impact itself on inflation. And in some cases where you see a currency weakening a lot, that brings further inflation. Right now, I think what we're seeing is we've had the initial step down in headline inflation, base effects falling out. Yeah. But what's happening is core is remaining really sticky, and it's really unclear that the trend lower extends or whether we just kind of bottom out higher than central banks would like.
Which pair is my Friday thermometer to know when inflation and core inflation breaks? On a euro dollar, is there some dynamic there where we see euro dollar 112, or should I say 103, where that's a signal to you of disinflation finally?
What's really interesting is that it's a similar dynamic happening across many countries, but at slightly different times. So this week, it was all about the RBA in Australia first up, and then the Bank of Canada that you mentioned. And so we've seen markets rush to price in more hikes from both the Australians and the Canadians. And at the moment, the Federal Reserve is lagging. I wouldn't be surprised if we then get a catch-up move where markets kind of pivot away from the Australians, Canadians, more towards the US next week or the week after.
Also, what would be the reluctance to do that? How would they signal why they aren't raising rates in light of, especially if that CPI report is as hot as people expect, after Norway saw a record high in terms of CPI just earlier this morning?
I think it's very deeply ingrained into markets that the Fed doesn't like to surprise, and it's fair, right? It's how they've treated us in the past. If they wanted to signal something, they would use a leak ahead of a meeting. And so we're all saying, well, they can't hike because there's only 7 or 8 basis points in the curve for June. But you also have to ask the question, well, does it really matter if it's just a question of timing? And if they don't hike in June, but they tell us they're almost certainly going to hike in July, short of something completely unexpected, a little bit like what the ECB did earlier this year, I mean, in many ways, that has the same impact, right? Because we're close to fully price for a hike by July, but then it raises the prospect of further hikes later on in the year.
I just immediately went to this one reporter at the Wall Street Journal to see whether he'd written anything lately, and he hasn't. So to your point, as far as the leaks go, it seems like we haven't really gotten indicated on that front. The Fed has a really difficult one to kind of parse in terms of messaging right now, especially if they don't want to surprise the market. How difficult right now is the ECB's job on Thursday?
And I think the ECB is a little bit easier because they've done a fairly good job of kind of guiding markets to roughly where they feel terminal rates are going. The broader question is actually what you mentioned earlier, John mentioned earlier, that you've had a slowdown in activity and yet inflation still remains kind of uncomfortably high. It's definitely a lot easier than it was a few months ago because, again, you've got those base effects, you've got energy prices coming down. But I think in many ways, the ECB's job is one of the easier ones. It's the Federal Reserve, I think, that has the tougher challenge up ahead.
Elsa, we haven't talked all week about TRY, and I want to bring it up, and I really don't know what to say about this other than it's a unique political experiment and, of course, the announcement of a new central banker. The fact is, and this is to Steve Hanke at Johns Hopkins, it's frankly, and I'm being inflammatory here, folks, on the edge of Zimbabwe. And the answer is at a 21 out to a 23, it's massively log convex, and it's out, dare I say, 3.9 standard deviations. What do you presume will happen in this disastrous Turkey?
I mean, it's such a great question, Tom. We actually had this conversation on the desk this morning and pulled up a Bloomberg chart.
Thank you. Good. Continue.
Did a 40-year chart of try, but on a logarithmic scale, which you can do on the Bloomberg terminal. And the reason for doing that is because if you look at it just in the context of the last year or the last few years, it looks like a parabolic move and people are like, oh, well, how much further can it continue from here? But actually, this has happened multiple times in the not too distant past. And I think that 40-year logarithmic chart just really highlights that. So, yeah, it doesn't look great.
Well, very quickly here, I know John wants to talk about actually things that matter, but I'm fascinated here with the new finance minister who Bloomberg knows well. I've done many panels with Mr. Semsak, ex-Merrill Lynch, et cetera, et cetera. And the answer is we're going to get a jump condition devaluation. I'm going to randomly pick out 35 as a wake up on Monday morning start point. And then what? Does RBC perceive Turkey has the what courage to do a full devaluation and reset?
Look, it's obviously a tricky situation to discuss. It's something that we've been trading, but we're not very actively we certainly don't publish research on it. All I would say is that when your spot devaluation exceeds even the very rich carry on your currency, you have a real confidence problem on your hands.
Asalinos of RBC, I think that was diplomacy there,
That was
Tom.
diplomacy there. She went walk off set. I'm sorry.
There's a question right now. I know what, and I'll say thank you, by the way, for joining us. I know how the market's perceiving this right now, Tom, but I think there is a broader conversation about whether there is going to be a return to orthodoxy in Turkey. That question's been asked a million times, by the way, over the last decade, and we've been burnt a million times over chasing that question. But you've got Simsek now in the finance ministry, Tom. You've got Hafiz Erkan, who comes from Goldman, First Republic for that matter as well, by the way, taking up the central bank. You just wonder if this is going to be different, TK, or if we just get more of the same.
That's the hope. I'm hugely biased here. I spent a lot of time in Istanbul in early Erdogan, which is clearly different than middle Erdogan and the train wreck we're in right now.
Completely different
and
person.
I said this, you saw, folks, how a pro like Elsa Lingos really struggled with that because nobody wants to be inflammatory here. But you're right. All of a sudden, there's hope with two adults in the room, and we'll see where it
I used to call this the toughest job in central banking because there was a decision you wanted to make and ultimately you were put under pressure to make a different one. And then it became the easiest job in central banking because you never actually had to do your job. Because Erdogan basically just took over and got what he wanted, Lisa.
And that seems to be what people are kind of betting on right now. It seems like the skepticism is sort of outweighing the hope right now, even though on paper, the hope actually would make sense just because these are professionals who do understand markets, just whether they're going to be allowed to do it.
Because of the NATO affiliation and certainly with the horrific war in Ukraine, one of the pressures that the International Monetary Fund will have to, again, with the hope of this new central banker, the hope of an experienced finance minister, all that Semsek symbolizes. I should point out he's Kurdish. And with these two appointments, does that give Georgieva and IMF more confidence to assist Erdogan to retrench back to middle Erdogan, or dare I say even get back to early Erdogan?
Optics are important, substance more so. On the optics, it looks like they're trying to restore credibility with these two hires, Tom.
Yeah.
Let's find out about the substance in the months and years to come.
I would suggest it deserves its surveillance team road trip. I mean,
to Istanbul?
I can state without question the best food I've ever had on the Bloomberg junket is Istanbul.
Really? What did you have?
Hands down. Everything was good. I just ate and, came back like a bloated chicken.
Really
I was on British Air then, and the plane went like this when I got out.
Did you have to move to sort of wait out on the plane?
Oh,
Is that what happened?
it was just, loved it. And I was very fortunate to be in Istanbul in another time and place. I didn't, I mean,
This is what you really wanted to talk about. You wanted to talk about food in Istanbul.
No, you know what I did? I'm over by the palaces, whatever, and I stumbled on the thing that's in James Bond From Russia with Love, where there were the Roman cisterns underneath, and the way they found them is the poor people above the cisterns had the best fish in town. And they couldn't figure out how they had to fish, and they just take a line to their house and put it down to the cisterns, where James Bond's walking around in the middle of the movie. You didn't expect it on a Friday,
A few years ago, Tom and I proposed a documentary that we were going to make, and we were going to go around the world and go to countries whose currencies had been beaten up, and we were going to have meals with locals and an economist and talk about what was happening in the economy and taste the local cuisine, talk about the foreign exchange market. That got axed.
Yeah, it was great. I mean,
if Turkish Airlines are interested and want to sponsor,
oh boy,
can make that happen. Maybe
the guy that was running at that time who vetoed that said you'll be lucky to get west of Newark, New Jersey.
Michael Purvis of Toolback and Advisors on this equity market coming up next.
Food and finance. I like the idea, guys. Keeping you up to date with news from around the world with the first word. I'm Lisa Mateo. Donald Trump has become the first former U.S. president to be charged with committing federal crimes. A grand jury has indicted Trump in connection with his refusal to return classified documents found at his Florida home. If convicted, he could face prison or be disqualified from holding public office, including seeking to recapture the White House in 2024. Most economists expect the Federal Reserve to pause interest rate increases next week for the first time in 15 months and leave policy on hold through December. According to economists surveyed by Bloomberg, the Federal Open Market Committee will keep rates steady at its meeting at the 5 to 5.25% range. Officials face a closer call on what to do in July. The White House is denying a report that China is building a spy base on Cuba that would target U.S. military bases and communications. White House National Secretary Council spokesman John Kirby told MSNBC that the press report is not accurate. Cuba's Foreign Affairs Ministry denied that report. ODS and Management is in talks with some of the world's largest investment banks, hoping to convince them to stick with the London firm. Several began distancing themselves from the company after new allegations of sexual assault surfaced against hedge fund manager Chris Benodi. And Morgan Stanley is cutting ties while JP Morgan and Goldman Sachs are said to be reviewing their links with the company. Odie CEO Peter Martin says the firm's lawyers are looking into the claims. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
From New York City.
From London. In Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
The breadth in the market, those 7 stocks representing more than 100% of the gains. Even if you look, it's not a uniquely U.S. story. That's a global story as well, that there's 10 companies representing 85% of the global gains.
Kristen Bidley there of Citi Global Wealth Management on the narrow leadership of this equity market in the US and worldwide. Here's this equity market right now on the S&P 500. Looking to go into Friday's session and onto the weekend, just a bit softer here. We're negative by almost 0.2% on the S&P 500. One of those 10 names, let's talk about it, Tesla. Tesla is up by more than 90% year to date. It's been quite a run so far year to date. We had some more weight to it. In a pre-market, in early trading, we're up by more than 4%. Higher on GM as well, up by 3.4%. GM and Mary Barra yesterday saying they're going to use these EV chargers that Tesla provides. They're going to design the car for that, Tom, in 2025. You get some adapters in between, all that good stuff, and we're moving towards an industry standard.
Tesla has a PE of 68. GM, I can't believe the number, has a PE of 5. But they're both auto companies. You got to be kidding me.
Yeah. And the idea is that GM starts to look a little bit more like Tesla. That's the hope.
That's been the 5-year hope.
Yeah,
they hired McKinsey to come up with that.
Dan Ives of Wedbush has this to say this morning. An upgrade to his price target. We reiterate our outperform rating while raising our price target from 215 to 300 as the sum of the parts story for Tesla now further comes into play with its supercharger network energy business. Lisa, AI-driven autonomous path, unmatched battery ecosystem, increased production scale scope globally. He's bullish, by the way, adding to the Tesla golden EV success story.
Well, and Dan Ives is a bull, and a lot of people will say this, and here, of course, he's saying this. But this time, there is something different. And Tom, you were saying this is a car company. Is it? I mean, if it's really going to be providing the infrastructure for charging, that's a new angle on an automobile industry that goes far beyond just competing with other auto manufacturers.
I just did a log extrapolation from the beginning of Musk, early Musk, all the way through middle Musk to end Musk. And basically at 234, Tesla is dead on its log regression. This is not overpriced, not underpriced. It's on trend through thick and thin.
What a win, though, for Elon Musk and Tesla, by the way.
What a win for Dan Ives.
Oh, no, politically, what a win. The White House...
They've embraced him.
Froze him out. Embraced Mary Barra of GM. Embraced Farley of Ford. Basically didn't talk to him for a long time. And here we are. He's the guy coming up with the industry standard. And GM's Mary Barra's hopping on Twitter to say that, by the way, we'll design the cars and go in that direction. That's a pretty big win for Elon Musk.
I agree. And it's a back and forth. Who knows what Elon's going to do this weekend? We'll be vilifying him on Monday.
Sure, obviously, yeah.
This is why I think this is why so many people are attracted to him. I mean, this is a guy that he's so emotional and so tactical, not strategic, that it's like every 3 days there's a different story. And
Genius
when he's on,
comes with extremes.
Yeah,
how many times have we seen that through history? See it time and time again.
Yeah, we said that about Michael Purvis as well.
We see that all the time, every time he comes on.
Yeah, you know. Are we going to brief this morning?
We're going to get Michael Purvis and his extremity.
Michael Purvis is going to come in right now. Okay, right now it's Analytical Geometry Friday for everybody who's a bear. Michael Purvis joins us right now, CEO of Tallback and Capital Advisors. First sentence of your note this morning, like me, you're on the x-axis. Everybody's looking at the parlor game and all that, and you're saying for investment, for belief in the equity market, you got to go look out the time function and what the Fed will do there. Discuss the x-axis.
Well, if you look at a history of Fed fund policy over the last few decades, it's in motion, up or down, much more than it actually is just sitting someplace, right? The average time at the end of a hiking cycle is really measured in months, not in years here. Now, one of the things that I think will be very interesting to see, and I think you're starting to see signs of it from Powell, is that there's a lot of lack of clarity about the inflation story, right? Not just, we've seen the surge from the supply shocks during COVID and Ukraine and monetary and fiscal stimulus, right? Call it 3 years of transitory, but that doesn't explain all the other inflationary dynamics. And I think the Fed is recognizing that, not to mention the fact that you've got employment, structural issues, and so forth. So one way to kind of square the circle, for the Fed is simply just to sort of camp out at terminal, if you will, right? Just get, maybe we get another 25 in July, possibly next week, and just stay there, even if the data cools, until you absolutely see 2% is really, right there with a bullseye on it.
As a trader, what's more important for you to track right now? The data that could signal potential Fed moves or what's going to happen on the economic front, or just clear sentiment with respect to investors?
Well, I think it really depends what you're trading. But, I think, look, right now, the velocity of the information that's going to sort of define the contours of where the 10-year trades, the 2-year trades, and all that is a much slower velocity than what we've been looking to over the last year, right? And so last year we had massive volatility, frankly, because the Fed put in, one of the most aggressive hiking cycles we've seen there. That is, I think, you can talk about Silicon Valley Bank and the tighter lending standards. You can talk about whether the cuts are going to get that are priced in will continue to get priced out. I personally think they do, but that's a slower motion thing. So the trade that I think it's been a very difficult market to trade, but the one trade that I have had a lot of conviction on over the last several months is just to be short equity volatility. Now we're down here at VIX with a 13 handle. It's probably time to close out of those types of trades here, because we are pretty low here. But I don't think we should be surprised that we're at 13.
The reason why I ask this is because we've been talking about how bearish everybody is. But in the past 3 weeks, it seems like people are really sick of hearing about bearishness. There's just sort of every time they read something that's bearish, they go, oh, again, you're going to tell me that? We've been hearing that and it hasn't happened, which means that there's sort of a shift toward chase the rally, FOMO, this sort of other kind of mood. How much does that have legs?
FOMO is a very powerful force. Here we are with a NASDAQ, which has led the broader rally at 26 times earnings. We have had some brighter lights on the earnings front here from the NASDAQ, and frankly from the other indices are now showing some positive earnings momentum. But that is, at 26 times, do you really want to be, if you miss the rally, you sort of feel obligated to. And one of the conundrums for many asset managers is that they bench to the S&P 500, which is weighted by these giant tech stocks. If it was all just materials that was having a great rally this year, it wouldn't be so much of an issue. But when your benchmark is being dragged up by the NDX, which is being led up by NVIDIA at 25 times revenues, it's going to create some problems later in the summer. Right. And, my personal my vectors are focusing on Q2 earnings season, because if the AI narrative doesn't really result in a meaningfully higher earnings outlook, right, and it's just sort of the big tech cost cutting, then I think at 26 times, you're going to be vulnerable.
I got to be quick here. You were brilliant on ADXY in the Pacific Rim. Do you have a Japan bet right now or a China bet that's tangible to year end?
Well, two very different stories, with the Nikkei doing something it hasn't done in a long time there. Look, I don't really have a clear view on Japan, only to mention the obvious thing that a lot of the economic data and some of the inflation data is really waking up. And I think the experiment the BOJ did that everyone was lampooning last year was a risky experiment, but I kind of wonder whether it's actually that they're going to be vindicated and they're going to finally wake up the animal spirits. And then, of course, there's some other structural positive trends going on in Japan and so forth that are going to make those equities more appealing there. China, though, is of course a different story.
Michael, good to see you. Yeah. Michael Purvis, thank you, of Tallback. We've had this rally, guys, with $5 trillion of cash sitting in money market funds. Just think about that.
Oh, the caution.
What's going to pull it out?
I mean, I don't memorize this stuff, but I can tell you that the charts on puts and gloom and caution and cash as a proxy for caution is a cliche off the charts. I mean, everybody's on board the get out of stocks trade, and as Mr. Purvis mentioned, at 13.75, how do you get to 12.75? That's like way pre-pandemic.
Michael Show's coming up. Great guest to talk about some of this stuff. The CEO of Market Field Asset Management with some things to say about the leadership in big tech. We'll have that conversation in just a moment. If you are just tuning in, the broader market, just a little bit softer, slightly negative on the S&P. Still heading towards a weekly gain, though, on the S&P 500. This week, not actually all about big tech. The Nasdaq actually down on the week so far. Yields a bit higher by 3 basis points. 375 on a 10-year. I have to say the bond market all over the place through the week so far. Surprises from the RBA in Australia, surprises from the Bank of Canada as well. Yields up, not quite. Yields unchanged, Tom,
not quite.
through
not
the week.
Quite so correct.
Bumpy road to absolutely nowhere.
I look careful, 10-year, 30-year in tips, and the answers are sort of this feeling.
Not done much. Point to
on
point
radio,
in between.
This looks good,
tons going on, but whipsawed by surprise hikes and weak data. Soft jobless claims going into next week. The final hurdle before the Fed decision on Wednesday, CPI on Tuesday. We'll break down the outlook for you on that in just a moment.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on that folks are so excited about it. Climate tech is the hottest area to be in.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years. Or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as started out a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is like you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And like frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
DOJ or other authorities
could face bigger challenges.
Britain's next.
It was going to keep Green World Cup. This is a 3.
As the economic picture does.
Is it the OK's getting ready to make a decision?
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
You have excess savings dissipating by the end of the year. You have student debt payments coming back. And so we think it's a consumer that looks a lot weaker by the end of this year.
We're in a world with higher inflation, and we've reset.
One conviction view that we have is this higher for longer narrative globally.
I'm still optimistic that the market is going to move higher by the end of the year into next year.
Ultimately, if you do go into a recession, bad news is bad news.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Back in a bull market, I remember a headline that Tom wrote a long time ago, the most hated bull market in the history of financial markets and all of that stuff. Feels that way so far year to date. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV, on radio with Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market just a touch negative going into the weekend. We're softer by 0.1%. The headlines, I'm sure you've all read them over the last day or so. TK, some big gains year to date.
Big gains in the equity market. They're there. We've been talking about the VIX is just a measurement, the VIX of the volatility of the Standard & Poor's 500, 13.76. And Michael Purvis saying that does describe a bull market. And then what? And the reading this weekend is big on the and then what of it. It's more like almost a October conversation.
The headlines of the last 24 hours, Tom, I think are very much about the story of the last year, which is the dominance of a handful of stocks dominating the S&P 500 and the year-to-date gains and the move off the bottom in October. I think that kind of drowns out what's happening beneath the surface and elsewhere. Lisa, you've raised the right question, I think, about that rotation that people have been waiting for. Is it developing? At the moment, month to date, the Russell is where the move has been.
And it's been led by some of the small regional banks as well. I mean, you've seen a recovery in other places. It does seem to be broadening out. And I wonder about Michael Purvis's comment there, that when you get to mid-year and you look at the headline S&P, even if it's tech driving the force, do people start to catch up with the other names to try to make sure that they can keep their shirt?
How many people have enjoyed this from October rally, the Yardeni Ankampora rally? How many people really have enjoyed it?
Deutsche Bank, Julian Emmanuel Evercore. There's some names out there, but there's two dominant, prominent names
Neil
that stick
Dutta
out.
and his team, DeGraff over at Renaissance.
Mike Wilson, great year last year. Morgan Stanley struggled to call the index this year. Marko Kolanovic struggled last year, struggling this year over at JP Morgan. It's been difficult, Tom, for a lot of people, and they've sat there, they've waited. You've been paid to wait in cash, you get 5%, and you're asking how many people have participated. I can point to $5 trillion that's not participating in money market funds, Tom, that has sat this out.
They're making 5%.
Sat this out at 5%, and
That's
that looked good at the start of the
NVIDIA
year.
Performance.
That doesn't look good in the middle of the year.
Well, it's a big debate, and of course, it sets up around rates with the inflation call on Tuesday. We'll dive into that. John, can I give you some good news? I have an offspring in Shanghai who taught me air matters. He looks at this thing religiously for his children every day. New York is 87 on the list, down from like number 3 yesterday.
We're doing better.
And we have green. We have green on the screen. It's 44, which is a really
we have blue
good
in the sky,
Paris-like
TK,
number.
and green on the screen. Beautiful.
Good morning, Atlanta. Washington is worse than New York by a bit. Atlanta's actually worser air than Washington. I did not know that.
It's been pretty bad. I mean, Lisa, for you and I, you go running. I was trying to work out yesterday. You can feel it.
I don't go running on a day like yesterday or the day before. You can feel it. And
you were
2
running
days ago.
in this stuff?
No.
I didn't run in this. I tried to work out yesterday. It did not work out.
I will say, walking through the parks, I walk instead of run with a mask on. Walking through the park, it was empty. It felt, you know, especially on Wednesday when it was sort of orange out.
Back to the pandemic.
Yeah, it felt back to the pandemic, except for a few hardcore, you know,
on your own with no one around you with a mask on. Like truly back to the pandemic.
Exactly. It was exciting.
We were told to. It's healthy. It's better for you. Your equity market on the S&P, slightly negative on the S&P 500. Just a bit softer. No real drama here whatsoever. Yields up a touch by 3 basis points. I think we can call that yield 375, Lisa. going into the Fed next week.
And going into the Fed, it has been a quiet period for the Federal Reserve, not a quiet period for ECB officials ahead of their Thursday meeting. So we do get some commentary from Vice President Luis de Guindos and Supervisory Board Chair Andrea Enria speaking ahead of that Thursday meeting. 4:30 p.m., the H8 report from the Federal Reserve, a key release showing the flight of money into money market funds from deposits. Okay, we're talking about they're just earning 5.5%. How terrible for them that they weren't in NVIDIA and some of the other shares. Yes, but on the other hand, after earning nothing, you're now earning 5.5%. And at what point does that actually stimulate spending with some income? It's something I really am curious about. And tomorrow, it's a big day in sports. There's nothing really going on in markets right now except for these sort of navel gazing. So we do get the French Open tennis women's singles final in Paris, Belmont Stakes in New York. And Man City is taking on Inter Milan at the Champions League, which I think is going to be really interesting.
Does Inter Milan have a chance against the juggernaut?
Big underdogs. But someone I'd really like to do well, Simone Inzaghi. Simone Inzaghi
I thought the same thing.
Is the coach of Inter Milan. When he was a player, he had to play second fiddle to his brother Filippo. Filippo was so much better, World Cup winner, played for AC Milan, Champions League winner. His brother was always in his shadow. It would be nice if he could do something as a manager.
Does Manchester United have any hope of gaining the glory of the modern Manchester City? I'm asking for a friend.
What do you mean, Tom? What do you mean by that?
Just for Manchester United to get the excellence.
You'd like to see United come back and topple City? Is that what
I
you're
don't
asking?
know. What do you think?
I'd love to see it.
As a Manchester United fan, Michael Shaw, are you a Liverpool household or a City household? What are you at the moment?
At the moment, it's Liverpool.
It's Liverpool,
which has been absolutely
so
devastating.
Who gets supported on Saturday? The house supports Inter or City?
I think City probably. That's my guess.
All right. Just figuring things out with Bramo TK. You ready to introduce the guest? Okay, Michael Shaw,
you can
CEO of
introduce the
Market.
guest.
It's amazing. It's amazing to see him totally lost for words when you brought this up.
It won't happen often.
Okay, helpful, Tom. Michael, good to see you. We won't talk about Manchester United. Don't worry. We'll talk about this market. I think Lisa asking the right question this morning. Is the rally broadening out? You seen signs of that?
I mean, I hope so. Yeah, I mean, the last 10 days or so certainly have had a much broader feel to them. Sort of week Wednesday to Wednesday. The S&P was up 2, the equal weight was up 4, and the Russell was up 8. And I don't think that sort of 4-to-1 is sustainable. But if a lot of this stuff has been left behind, I think the overall state of the economy is better. It's certainly much better than people expected it to be. If you went back to last December and saw what people thought the first half of the year would look like, most people really thought we'd see a big deterioration. That hasn't happened. So I think sort of real economic activity is much better than people would expect. And the question still is, what does financial engineering look like with rates at 5% and probably going higher?
Michael, it has been a tough year. It has been one of the toughest years I can imagine, exhausting, a lot of people will say, unless they were all in on NVIDIA. And I'm wondering if you've missed it. What do you look for to know whether this is going to be a FOMO or a MAMU or whatever you want to call it, and it's going to keep going for a while, or if it's basically luring people in to just be, annihilated in a couple of weeks?
I think anybody's going to get annihilated in a couple of weeks. I mean, I think it takes time for a confident, if to call it a confident market like this to fall apart. It would take something different. As I say, I don't see any real deterioration in the economy. And I don't think there's a lot of downside in cyclicality, which is, that's still a fairly cheap part of the market.
So you're going into equities right now?
We have been in cyclical equities this year. It hasn't really worked so far. But I do think that a sort of more optimistic overall mindset will lead people to understand that the economy is okay. And the cyclical portion of the equity market, I think, can play catch up.
I look, Michael, back at the analog of the 70s, and granted it was a horrific recession versus a horrific pandemic. We came off the bottom in 1974, up 52%. World's going to end, that's it. There's the bounce, short squeeze, whatever. And then we went up another 29% into 1976, 77 as well. How do we generate a second leg to a bull market that started in October?
I don't think it's... The bear market last year wasn't like 74. We used that 74 analog a lot back in 2008. when people really thought the world had ended. But as I say, I think that there's room for the average equity market. The S&P equal weight only crossed back into positive territory for the year this year. There's room for a lot of what do they call them, average equities to do okay in this kind of an environment. I'm still of the belief that at some point interest rates are going to be the story, and it's more likely to be the longer end of the curve rather than the short end of the curve. I think this time that causes some disruption. But I think between now and then, I would be hopeful that certainly portions of the global markets, Asian markets, have really quietly had a very good year this year. It's not just Japan; it's markets like Korea as well, and the sort of cyclical portion of the U.S. equity market, I think can generate okay returns.
Does Asia develop a disinflationary pulse that assists the U.S. markets?
No, I think it's just the sort of quality of corporate earnings over there is better than people expect. And I'd say a market like Korea is still a pretty cheap market out there.
We've had conversations with you over the last several months about the prospect of a lost decade of returns at the headline market cap weighted S&P 500. A few months in to the year, and already we were talking about US exceptionalism driven by 5 big names on the S&P 500. It doesn't feel like the conversations change. Is that just a 6-month moment in time that we leave behind, or are you questioning maybe some of the ideas that we were discussing in the last few months with you?
No. I mean, I still think that the headline index, that sort of great year it had in 2021, I think you're going to pay for it. I think you're going to pay for it for several years. The S&P is still 15% below its peak in 2021. So you have a good way to go. But I am surprised and impressed by this new wave of enthusiasm. It took something new for people to get excited about, that they've been given it with AI. And this thing will have to run its course.
Let's just build on that a little bit more. In the last decade, we had FANG.
Yes.
Europe didn't. And now all of a sudden in 2023, we have NVIDIA and others, and Europe does not. And I think that's part of the question too, whether we can really get this global cyclical story going at the equity market level, with that being the dominant equity market story of the moment. Is that competing with the way you were thinking about things coming into 23?
As I say, yes and no. As I say, there's portions of the global market which have behaved as I would have expected. As I say, some of these like boring cyclical indexes have really had a good time of it on the other side of the world. Within the US, those sorts of equities simply haven't performed in the way we would have wanted them to do so. And I think in the US, there is a process of capital being sucked into the big technology names away from the part of the market we like.
In dollars, Korea up 36% off the bottom, SPX up 20%.
Get a shot of the Nikkei. Get a shot of the Nikkei up. Yeah, Japan as well. Yeah. Michael, this was great.
Thank you.
Thank you. Fantastic to catch up with you. Michael Schaal of Market Field, supporting Inter Milan, I think.
I will be.
This weekend, no doubt.
Forlornly.
Binky Charter at Deutsche Bank coming up in the next hour. Looking forward to the conversation. Binky thinks we can get out a few more 100 points on the S&P.
Has Binky nailed it or what?
He's doing better this year.
Wow.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. New Yorkers can breathe a little easier today. City environmental officials say the air quality improved overnight to moderate. Still, people sensitive to pollution are being advised to take precautions. New York's air quality index improved 100 on a scale of 0 to 500 early today. That reading reached the most serious level of hazardous earlier in the week as smoke from the wildfires in Canada moved across the U.S. Northeast. Tesla shares are poised to rise for a record 11th consecutive session, matching the stock's longest winning streak set in January 2021. That after General Motors said it would adapt its electric vehicles to Tesla superchargers. It follows a similar move from Ford. Tesla shares have risen more than 90% so far this year. UBS has sealed an agreement with the Swiss government to cover $9.9 billion of losses it could incur from the rescue of Credit Suisse. Now, that clears a major hurdle to closing the historic takeover. The agreement covers about 3% of the combined assets of the merged bank. And Bank of Japan officials see little need to adjust its yield curve control program. Bloomberg has learned that a move is unlikely at next week's policy meeting, given the improvement in the functioning of the bond market and the smooth shape of the yield curve. Now, according to a Bloomberg survey, nearly all economists expect no major policy shift at the meeting. I'm Lisa Mateo, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
I'm an innocent man. I did nothing wrong. And we will fight this out just like we've been fighting for 7 years. It would be wonderful if we could devote our full time to making America great again. And that's exactly what we did. But now, again, our country is in decline. We're a failing nation. And this is what they do.
The former president of the United States, President Trump, there on Truth Social. In the last 24 hours, the former president indicted over his refusal to return classified documents found at his Florida home. This according to 3 people familiar with the matter. The next steps over the next week, the former president, Donald Trump, told to appear in federal court in Miami on Tuesday, Tom. So this one is going to pick up through the weekend and into next week.
I thought the brief from Terry Haynes earlier was great, which is this is not a time to be a lawyer or to play junior lawyer. And what Lawfare blog, Scott Anderson and Ben Whitty say, what is really important, we're blind until Tuesday. So it'll be an important conversation. But everyone, including the president, is blind on this.
We're working on our reporting from our colleagues here, Tom. The U.S. charges include document retention and conspiracy to obstruct. That's the latest reporting at the moment.
Emery Horton with us right now, our chief indictment correspondent in Washington. It seems to not go away. We were talking state court in New York. There's issues in Atlanta, maybe coming, who knows. Was this a surprise for Washington to see this? It's got to be that you knew it was coming, right?
It wasn't a surprise because we did see recently Trump's lawyers show up in Washington, D.C. They were at this meeting at the Department of Justice. What was more surprising is this wrinkle that there's also been a grand jury taking place at the same time in Miami. And this was something that
Explain that. What does that mean?
Know that?
No, that is very new. We learned about that last week reporting from the New York Times. So when the document case started, it obviously started in Washington, D.C., because these were documents were taken from the White House. Then, of course, they were found in Mar-a-Lago. We all remember the search of the former president's resort in Palm Beach last year from the FBI. They were going after these classified documents. There was a subpoena to collect them. He didn't oblige. So they went after these classified documents. So now when the special counsel was looking into this, everyone thought the grand jury was just taking place in Washington. But now it's happening in Florida. And Florida is a place where the former president has a lot of support. It is a state he won. It is his own turf. So everyone thought that if there was going to be this indictment in Washington, he would certainly try to move it to Florida. But now it's already happening in Florida. So that's the wrinkle that I think most people were surprised about, not that he wasn't going to get indicted.
This year, we've seen it a million times. How many former officials, current officials have documents, have found documents, didn't know they had documents. Do we know so far about what's different about this case with the former president compared to, say, others?
So two things. One, we already see that Mike Pence, who's now also running for president, he has been cleared. Biden, there's still a special counsel looking into his case that is still pending. Two things that are very clear about Biden and Pence: they invited authorities into their home to come in, canvass areas, even their second home, their offices, to collect the documents themselves. The former president was asked by the National Archives to give back the documents, and he did it. And you have Bill Barr 2 days ago on CBS This Morning saying, this is a case of his own making. This is the former president's own attorney general saying he was just jerking around the Justice Department. If he had just returned the documents, he says that the DOJ has provided a lot of deference to the former president, but if he had just returned the documents, this case really would have went away.
We're not lawyers. We can't necessarily weigh in on charges, especially because we have not seen them laid out in the indictment, but we can get responses from political opponents, including from the Republican Party. And that really may be one of the key questions over the weekend. What is the response of the other candidates? Do they back him, or do they step away and say this is a reason why he shouldn't be president?
Yeah, I think this is going to be a real litmus test, right? Every single Republican candidate is now going to be asked, will you pardon the former president if he is supposed to be going to jail? Some of these charges, and again, we don't know everything, but we potentially could get the indictment today that's under seal. Some of them come with 20 years prison sentences. Some of them come with 10 years prison sentences. They're all going to be asked, would you pardon the former president? And that's going to be a difficult one for individuals to answer. Mike Pence couldn't answer that at the CNN town hall. He said he wouldn't want to deal in hypotheticals.
Is there still a fear of deep state in the broader population that will percolate out in poll numbers?
Not sure it's in the broader population, but it certainly is in the 30% of the base of the Republican Party that Trump has a handle of. Listen, every time the former president is faced with a massive hurdle, with a lawsuit, his numbers go up and his advertising campaign donations also go up. The bigger question as well is, as this continues, and Tom, you mentioned potentially what happens in Georgia, potentially there's another suit Letitia James is looking at into his company here in New York. Do all of these just start to become so overwhelming and you become Trump legal fatigue, and potentially he starts to lose some of those would-be voters?
I point to Lisa's comments on pardoning that, folks, there's a huge issue in the zeitgeist right now about Gerald Ford and Richard Nixon from a few years back as well. Is it safe to say that the contributions the President Trump is getting are paying for his legal bills?
I'm not sure.
We don't know.
I'm not sure that would be fair to say right now. Potentially some of them, though.
I'm thinking he's got, what, 3 geographies? Is that right?
In
to
terms
deal
of
with New York, Atlanta, Miami?
No, 4.
4.
New York, Atlanta, Miami, and also Washington is still looking into the insurrection.
I just I find it extraordinary. This process. What will you look for in the next? Well, what will you look for Tuesday? Let's focus on Tuesday. We're not going to get what we saw before, which is cable TV news monitoring John for what?
Are
was
we
it,
not?
8 hours?
Why wouldn't we? I mean, the president. It's a very quick
I don't
drive
know.
from West Palm Beach to Miami. He's at the moment, I believe, the former president though is in New Jersey. He'll be obviously likely be flying back to Mar-a-Lago before he goes to Miami. But I imagine cable news will be following his road down from West Palm Beach to Miami. It's a beautiful drive.
Do you know a good lawyer?
Do I know a good lawyer?
I've been cleaning out some stuff.
Have you found some
and
documents?
I shredded, Good Morning Heidi Prisbille at Politico, a photo of me and Heidi with President and Mrs. Bush from a few years ago.
Is that going to get you in trouble? Was that
I think it
classified?
could be a felony offense.
What was the photo of?
We should. The Christmas party.
Was it Tom with a Republican?
You make
no.
It's the Christmas party. Anne Marie goes to it every year. I mean, it's the White House Christmas party, and you do a photo with the president.
I want to build on something Lisa said to wrap things up. Lisa asked about the candidates being asked to whether they'd pardon the former president. Just to go one step into that conversation a little bit more, I just wonder, for the likes of Governor Christie, isn't this part of the pitch? Isn't this part of the pitch for some of those candidates? Don't they come out and say, this is it, the former president is clumsy, this is the way he behaves, it's reckless, and et cetera, et cetera? Does it go in that direction?
Well, the issue is that the former president is innocent. You're innocent in this country until proven guilty, and that is the tone the former governor of New Jersey took. So Chris Christie said, let's see the facts are when there's a possible indictment, when that's released. As I've said before, no one is above the law, no matter how much they wish they were. We will have more to say when the facts are revealed. So a lot of individuals will also want to punt. They want to give themselves some time. They want to make sure that now that they are running against the former president, they can't be seen as trying to weaponize this, and they're going to play it, I think, some of them very straight.
Interesting. It will be very interesting to see how that develops over the weekend. That's for sure.
Garrett, Red Sox, Yankees. Where are you sitting?
We're doing baseball.
Where are you sitting?
Is that going on?
I'm sitting behind home plate, of course.
Are you going,
Why
to
would
the
I
game this
expect
weekend?
otherwise?
Are you? AMH, it's good to see
I
you.
bought a ticket for Tom.
Are you going to the game this weekend?
The Red Sox, folks, this is important. The Red Sox are so weak in this division, they're bordering on the 1965 Red Sox, which ruined my childhood. I was scarred. They lost 100 games. Frank Malzone is the only reason. Dick
How many
Raddatz,
games did they play?
They 160 games, and they lost 100
And they lost
of
100.
them. Yeah, worst team ever.
Wow.
There it was.
Say that again. Boston Red Sox, worst team
Worst
ever.
team ever.
Thank
Can we
you.
put that in a banner? Can we get that in a banner?
Garrett Cole is
Keen says.
really fun to watch. He's really impressive, I have to admit.
Is Judge back?
Love it.
I don't know.
No, I don't think so.
I don't think so.
No, he's hurt.
Okay. Is that the end of the baseball
It's
talk?
baseball talk.
That was
Let's
fun,
get
all
back to Manchester City.
Kathy Jones is coming up. Charles Schwab on a mid-year outlook. We're going to catch up with Kathy in about 5 minutes' time. Look out for that conversation. On the data front, really light on the economic data front at the moment going into next week, but it picks up next week. On Tuesday, CPI data, on to Wednesday, and the Federal Reserve. Equity futures just about unchanged on the S&P 500. Yields just a touch higher by 3 basis points, 374.91, and the euro just short of 108 at the moment, 107.70, and negative about 0.1%. Getting you to the weekend live on Bloomberg TV and radio.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Equities on the S&P 500 shaping up as follows. On the S&P, we look a little something like this. Basically unchanged, going absolutely nowhere. On the Nasdaq, we're positive by 0.08%, more than positive by 0.08% on the year. Flying. On the S&P 500, off the lows of October, up by more than 20%. You're going to wake up to a lot of headlines about bull markets and narrow leadership, and 5, 6, 7 names on the S&P doing all the heavy lifting. More recently, though, month to date so far in June, some of the small caps, the Russell, starting to pick up the slack just a touch. The Russell this morning down by 0.1% on the month. For the month of June, up by around about 7% or so for the small caps. Let's see if that continues. And to Lisa's point, whether this equity market rally so far this year begins to broaden out.
That's a distinction this week. The small cap move is a distinction this week. Michael Schill brought this up, and it's, for me, it's a new conversation. It's not a bank conversation per se. It's there, granted, the banks, but it's a new part of it.
Will it continue? This is something the likes of Bank of America and Savita Subramaniam are looking for more of. Savita pointing out that Apple is bigger than the Russell 2000, which is something worth thinking about. In the bond market, the 2-year, 10-year, 30-year looks a little something like this. The 2-year, I have to say the bond market stuck between a rock and a hard place this week, just whipsawed by surprise rate hikes on one side, pushing yields higher, and then soft economic data yesterday, jobless claims pushing yields lower. Then it's on to CPI on Tuesday, the Federal Reserve on Wednesday. Good luck out there. 455 on a 2-year, 374 on a 10-year, yields higher by about 2 or 3 basis points. I do want to finish on a single currency, the euro, and just talk about the revised economic data that we had out of Europe in the last 24 hours, suggesting that we've had 2 consecutive quarters of negative growth. Most people call that a recession, but I haven't got time to have that debate with you this morning. We have had no growth in Europe in Q4, no growth in Europe in Q1, and yet still we have an inflation problem. And I think there's a much broader conversation to have about the economics of that. Guy Johnson bringing up this point out of London yesterday. That's a problem for the ECB, Lisa, and maybe even a problem for the Federal Reserve. We're talking about the softer growth they were looking for, hoping for. That was an objective, almost a target, to get inflation down, and they've had it, and not much happened.
And so how are they going to justify not hiking rates at a meeting where it's clear that any kind of weakness isn't really exactly all that painful? What I'm watching, we've been talking about it throughout the morning, Tesla coming out with a huge win, General Motors saying that it will use its electric vehicle superchargers, and really got on the bandwagon that Ford had already gotten on. Basically, is Tesla still a car manufacturer, or is it the infrastructure for a broader EV network in the United States that is adapted by some of the other auto manufacturers? Those shares up 6%. I believe it is the longest streak. I believe 11 straight days of gains on Tesla, the longest going back to 2021, one of the record lifts. We've seen General Motors shares up 4.7% as well. Carvana, fascinating to me. Today's move, nothing to write home about. But yesterday, a record 56% surge. The short positions absolutely decimated. All these people trying to leave this company for dead. And it came out and said, we're improving. And everybody who was trying to short this company got blown up.
50 to 350. I think that's a moonshot. Cratered.
What are we looking at?
Carvana,
okay,
left for
good.
dead. CVNA, left for
Just
dead.
making sure, you never know.
9 to 24. See the abuse I get here, Kathy? It's just terrible. 9 to 24.
That was nice.
They made it back to 24.
Okay, I understand. You could talk about levels, you could talk about percents. The point is, people are looking for the companies during the pandemic that were left for dead, and they've been trying to pile on, and then, oh yeah, they're not dead yet. It hasn't been the zombie roll-up. And another one, DocuSign, really bid up during the pandemic, and what you have right now is you have shares up more than 5% after coming out, raising their outlook, seeing better than expected earnings. Again, some of these companies that grew up during the pandemic are adapting and adjusting, Tom, and here they are, and they're actually delivering some of the results.
She's on it today.
She's on it today.
Who's we wrote the script for?
She is. That was good.
She's just killing it.
What do companies do, Tom?
Is it too early for a beverage?
They adapt and they adjust. Charles Schwab out with their mid-year outlook. Kathy Jones and the team weighing in on the Fed, writing this. We look for the Fed to keep its policy stance largely on hold in the second half of the year, although one more rate hike is possible. A shift to easing policy would only likely be seen if the economy were to fall into recession or if financial stability issues were to re-emerge. TK, that's their view.
That's the view of Charles Schwab. Kathy Jones joins us right now. They're fixed income strategists. And I'm going to go to someone we were talking about with your exquisite ability to play piano, which is Gershwin George, where he said, life is a lot like jazz. Boy, you better improvise. How do you improvise in the bond market with the oddity of post-pandemic economics and the oddity of the ambiguity, I should say, almost about where we are right now?
Yeah, I mean, I think that's really the challenge not only strategists have, but also the Fed is facing, right? How do they set policy in an environment that's really very unfamiliar? The way we've been doing it is simply either barbelling or laddering and not trying to play every little up and down in the market. So if, you can stay short and try to roll out and time it perfectly, but there's a lot of reinvestment risk if you miss it because these moves are so fast.
Are you doing this with combining your work with Liz Ann Saunders? Are you doing it with the understanding there will be a jump condition in the short end or even a dramatic movement in the long end, or do you see sort of stability out there as you barbell or ladder?
Yeah, we think in the bond market it'll be more stable. We had huge volatility in the first half of the year, and I think that was the market readjusting to Fed policy and all the surprises that we've had. And yet, we haven't gone anywhere, right? We had all this volatility, and yields pretty much from 2 years out are about the same as they were at the beginning of the year. But we think second half should be somewhat more stable, I mean, barring some sort of crazy financial market event that seems to happen every 6 weeks. But barring that, I think that we should have a fairly stable move here.
There's this sort of renegade theory out there right now, trying to justify perhaps some of the moves and some of the resilience in the economy, or else it's just true, which is we've been talking about the lure of 5.5% on cash as a negative, as sucking liquidity out of the market. But some people say it's actually stimulative because all of a sudden you can get returns on your cash, which gives you more money to go out and spend that much more. Which is it?
I guess that's a tough question to answer. I think the 5%, the higher yields are more punishment than reward, right? Because the number of savers that are actually benefiting from that are doing fine, but you have a whole bunch of people who are companies and individuals trying to borrow, either get a mortgage, a car loan, companies trying to refinance at higher rates. I would say it's more negative than positive.
It's negative in theory, but this is what I keep hearing from people, that nobody who's buying a home is paying 7% mortgage rate. Everybody's getting some other mortgage rate. Companies can get pretty low rates if they're a good company. On average, they're high, but those companies that have to pay through the nose aren't borrowing at those rates. So this interest rate effect, the punishment, isn't actually bleeding into the economy, and the reward is actually driving even more investment. Is that an accurate way to understand the dynamic that's been so confounding so far this year?
Well, I would say the credit conditions have been easier if you go to the capital markets than it would normally be under these circumstances. But if you're like I say, you're a low credit borrower, those costs really are going up, and we're seeing a lot of weakness at the low end of the credit spectrum. And I think it's just a matter of time. It's hard to believe that we can have all this tightening, 500 basis points in a very short period of time, QT also at the same time, and not have an economic effect.
1 year forward, laddered or barbelled, whatever the blend is, full faith and credit corporate, are you clipping a coupon or can you actually manage and position for total return?
I think that the bulk of what you'll get will come from the coupon, but you can position to get some total return.
You're going to give me a double-digit total return?
Not double digit. I think that would be very unlikely.
If I don't get 11%, I can't come to Schwab.
No, I'm sorry. No, I think 11%.
Well, that was just, folks, I'm busting chops with Kathy Jones. That was a discussion from about 10, 12, 20 years ago. Right. That was fun, wasn't it?
It was. It was.
Can I give you a stat to build off what Lisa said?
Please.
1/3 of homes in this country bought with cash.
I noticed. I'm glad you bring that up.
Highest share in like a decade. That was also the stat, by the way, for the whole of last year, too, from Redfin. So 1/3, Lisa, to your point.
Yeah, they're bought in cash. And then the others are bought from developers straight up that are offering them much lower rates, or they're refinancing existing, or they're sort of taking on other loans for lower. Again, the point being, the impulse isn't making its way into slowing the economy in a material way. And this is the reason why people are wondering, why hasn't it been more painful?
Oh, they're buying new homes because old ones aren't for sale.
Exactly.
Because they've got people in them with mortgages at 3%. This housing market is totally distorted.
Completely.
It's totally distorted.
I would suggest it's always been distorted, and the pandemic made it shockingly. I mean, the rent now is $4,300 something. Jonathan Miller Samuel.
It's nuts. But ask yourself this, Tom. This is a big question to ask, and it's connected to monetary policy and builds on what Lisa's talking about because it's so important. Are the long and variable lags longer, like 30 years long, because mortgages at 3% are like 30 years long, and everyone did that? I hope you did that. I didn't do that. I wish I had done that, using the term everyone loosely. Or are we just finding out this economy is way more resilient, Kathy, and that 5% doesn't get it done?
Yeah, I think it's the long and variable lags are longer. And, let's put housing aside and let's look at all the other costs that are going up. And also the fact that we've had sub 2% growth now for several quarters. Manufacturing sector is really very weak. And we're starting to see the ISM numbers on the service side come down as well, new orders. So I think it's been longer because we had such a fiscal and monetary policy response to the pandemic that it's taking longer for it to work its way out. But it's hard for me to believe, again, that that's not going to happen over time. And I think that's the Fed's whole hold on to high rates, because if inflation continues to come down, holding is tightening. And particularly with QT going on in the background.
This is such a good point that's missed by so many people, and I totally agree with you. You can keep the nominal rate steady, but the real rate shifts. Right. That's the point, right?
Right. And real rates are up. And if they stay up for another year or so, that's going to have an impact on the economy.
Could 10-year real rate 1.54%. I modeled out 2.05% as sort of before all this idiocy. Do you people suggest we'll see a 10-year real rate that'll migrate back to the sort of the moving averages of another time and place?
I think 2% might be a little bit on the high side for a 10-year, but we'd be actually looking at tips right here and locking in some of those real yields.
Interesting. Kathy, it's good to see you. Kathy Jones at Charles Schwab. Wonderful conversation. So hard to relate to the idea that a third of the houses sold here are bought with cash. That, the distinction between the haves and have-nots. If you're not one of those, you're thinking, are you serious? Really? A third of housing in this country is bought with all cash?
Guess who's buying that? Guess which third of the population?
Yeah.
But you've heard this from me before. It's not news, but I'm in the camp where we've wildly disaggregated as a society. And yes, it's the haves, the have-nots. It's the two Americas. Maybe it's three Americas. But there's an America out there loading into property and foreigners as well with cash.
Nadia Calvino coming up. Conversation you don't want to miss with the Spanish finance minister. Need to talk about the drought in Spain. Bramo's concerned about the olive oil supply.
It's bad.
There's a lot to talk about here. Your equity market just about unchanged. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. New Yorkers can breathe a little easier today. City environmental officials say the air quality improved overnight to moderate. Still, people sensitive to pollution are being advised to take precautions. New York's air quality index improved to 100 on a scale of 0 to 500 early today. The reading reached the most serious level of hazardous earlier in the week as smoke from the wildfires in Canada moved across the U.S. Northeast. The UK has posted fresh health warnings through the weekend. Soaring temperatures caused by a blast of hot air have pushed the nation's health security agency to issue an alert for parts of the country from Friday, signaling risk for people over 65 and those with pre-existing conditions. Now, temperatures will reach nearly 82 degrees in the British and German capitals on Saturday. Binance is being cut off from its banking partners after a lawsuit from the Securities and Exchange Commission. The cryptocurrency exchange says it could happen as early as next week and told its customers that it's suspending USD deposits and recurring buy orders from transitioning to a crypto-only exchange. Binance calls the SEC's allegations unjustified. Former Barclays CEO Jess Staley has been out of sight for more than a year and a half, as the revelations about his relationship with disgraced financier Jeffrey Epstein piled up. But in New York this weekend, Staley is scheduled to give his version of events for the first time. A pair of lawsuits allege he witnessed an assault on a young woman and may even have participated in a sex trafficking ring run by Epstein. Staley's lawyers deny the allegations. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Top names at the Fed are on Bloomberg.
Right now, if you had to tip the scales, the next move is going to be an increase or a cut. It's pretty heavily weighted to the increase for me.
Nobody covers the Fed like Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
You've had a slowdown in activity, and yet inflation still remains kind of uncomfortably high. It's definitely a lot easier than it was a few months ago because, again, you've got those base effects, you've got energy prices coming down. But I think in many ways, the ECB's job is one of the easier ones. It's the Federal Reserve, I think, that has the tougher challenge up ahead.
Fantastic to hear from Marceline Yosser, the Global Head of FX Strategy at RBC, just commenting on the weakness we've seen in European growth in Q4, in Q1, and the lack of progress we've made on inflation with that in mind. The ECB coming up next week after the Federal Reserve, looking for a 25 basis point hike from the European Central Bank. Still up in the air as to whether the Federal Reserve makes a move on Wednesday. Tuesday might be the deciding factor. We get CPI inflation data here stateside on Tuesday morning. Just to quickly touch base with the price action for you on the S&P 500, just about unchanged going into Friday's session. Absolutely unchanged on the S&P right now after closing yesterday in a bull market. Tom, tons of commentary about the narrow leadership, tech stocks doing the heavy lifting. Just a little bit more this morning about a broader conversation about maybe the potential of this equity market rally broadening out.
And certainly the June 30 reset of mid-year is happening a few weeks earlier here as the bears and those in cash. I'm not going to call the people in cash bears, but the answer is there's a humbled tone on this Friday.
Well, I can tell you the bulls. I just caught Binky Chadha at Deutsche Bank out of the corner of my eye. And Binky's going to catch up with us, I think, in the next 10 minutes. He's looking for 4,500 on the S&P.
In the inflation report next week in the Fed meeting, what we're going to do is really focus here on the guesstimates forward. Right now, we are going to digress, and we are thrilled to bring you someone who runs an economy that is better than good. She's picking up a trophy in New York this evening. Nadia Calvino is Spanish Vice President, Minister for the Economy and Digitalization of #1 performing always Spain. in the continent of Europe. John, why is Spain always a number one performer?
We're talking about football.
The pixie dust there.
We're talking about football.
Well, I
Real
go
Madrid,
football or
Barcelona.
Yeah, you know. I mean, there it is. But the answer is Spain is unique. We're thrilled that the Vice President could join us this morning. Thank you so much for joining us. I've got to go to the weather. IMF will meet in Marrakesh, and the idea is there is a drought in Africa coming over that will grossly destabilize the agricultural dynamo that is Spain. And quite frankly, there's worry about drinking water as well. How urgent is the drought in southern Spain?
Well, it is a very serious issue because Spain is a world superpower in the agri-food sector, and so the drought is having an impact on the harvest in some areas, having to do with cereal, for example. But drinking water is guaranteed. And we're investing very heavily, actually more than 6 billion euros, in the digitalization of water management and the efficient infrastructures for water management. You may know or not that Spain is the second most efficient country in the world after Israel in water management. And so we're heavily investing in that so that we can continue to be highly performant.
There's so many other issues. I'm going to leave it there, but there's much to talk about on that. I'm sure we will in the coming months. What has changed is you and Mr. Sanchez have a snap election to deal with. Our Alonso Soto says this is absolutely front and center. How will you approach the snap election?
Well, you know, the economy is performing, is outstanding, as you rightly pointed out. It's better than good.
There? I read the notes. I did okay.
Yeah, you did very well.
Okay,
actually, it's better than good. And indeed, I mean, there's strong growth, strong job creation. Inflation is down to around 3% already in Spain. So the performance of the economy is outstanding. And I trust, you know, that Spanish citizens will actually...
But why is there a snap? I don't mean to interrupt, but this is important. The political turmoil in Spain is tangible. Why, given a good inflation and good economy picture?
Well, we had regional and local elections, and what we saw there was a rise of the right and, more importantly, the extreme right. This movement is not only happening in Spain. You were talking about it. Of course, it's relevant here in the US. It is happening throughout the EU, and this is a movement that I personally hope it does not continue. And President Sanchez decided to call the snap election so that we can have clarity. Spain will take over the presidency of the EU in July, and we need to have clarity and a stable government and not be, you know, in the middle of a campaign for the presidency.
There's still work to do before we get there. Vice President Calvino, one thing you mentioned there was the drought, and that's had an effect on price pressure. Now, you've made some progress on inflation. You do have an anti-inflation package due to expire at the end of this month. Is that something you're thinking about renewing?
Well, we're assessing which measures we should continue to have in the second part of the year and which do no longer make sense, because the evolution in international energy markets, you were just discussing that energy prices have gone down. We are in pre-war levels already, so we have to see whether those measures should continue or not beyond June. And likewise for VAT, so indirect taxes on food and others.
Could you give me some insight on that now?
No, because we're in the midst of the analysis, and what we have been doing since the pandemic hit us is adjust measures every 3 or 6 months so that we could have a flexible approach and an efficient use of public resources. I mean, we're talking about public money when we reduce taxes or we give public support. And so we have to be very focused and very efficient. This has worked well so far, and that explains why the Spanish economy is doing so well. And we should continue on the same line of responsibility and effectiveness.
How much have you enjoyed the euro being weak versus the dollar and sort of the tourism boom that has emerged on the heels of that?
Well, we've seen a very strong performance of the tourism sector indeed, and April has been a record month in terms of number of visitors and in terms of the revenues of the sector, and we expect the summer to be also extremely positive. But the current account surplus that Spain is showing, and this is a historical first, you know, never in history did we have this surplus, particularly when we have so strong growth. But what's remarkable is not the good performance of tourism exports, but non-tourism related services showing that the Spanish economy is gaining competitiveness and market share. Not only the goods sectors, but the non-tourism related services are being, very positive and pulling growth up.
Is that what you're trying to emphasize right now? The sort of manufacturing side, the non-tourism side, even as the tourism side really is one of the main drivers of the strength that has in some cases been unprecedented in Spain?
What I think should be highlighted is what we're talking about is not just a bouncing back or a strong recovery from a macroeconomic or macro magnitude point of view, but that there is a structural modernization and transformation of the Spanish economy ongoing, which has to do with the new green economy, which has to do with digitalization, and it has a lot to do with the European funds, Next Generation EU investment and reform program. We have front-loaded that investment and reform plan, and the results are already visible.
Have you had a chat with Elon Musk at all?
No.
Should you have a conversation with him? Because he's reportedly in talks to build an EV factory in Spain.
Yes. I mean, we hear regularly, I should say. We hear about a possible battery.
Have you tried to reach out and have that conversation?
Well, I personally don't have a relationship with him, or I haven't had a chance to talk to him. But I am sure that the President's office is in contact with anybody that's interested in investing in Spain. Due to, thanks to the low energy prices, high penetration of renewables, and the competitiveness of the Spanish economy, we're attracting unprecedented investments.
Asking for a friend, I was in Washington, and the Dutch finance minister could not get us tickets to Vermeer. The whole team wanted to go to Amsterdam and see the Vermeer. Can you get us tickets to the Prado here with the Picasso opening up? I mean, 50th anniversary of this giant of Spain with El Greco. We need tickets to the Prado. Can we?
Tom, anything you need.
There we go. There we go.
I have
Coming
a
up,
sweet spot
the
here.
last week of June from Madrid.
Vice President Calvino, Nadia, thank you. It's good to see you. It's
Thanks to
fantastic to see you in New York.
Delighted to be here.
Thank you very much. Nadia Calvino there, the Vice President of Spain, with a lot on the table, a lot to sort out this summer, Tom.
This is, in America, this is an undertold story. And we know, I'll be honest, this all got jump-started by, of all people, Madonna, who started talking up Lisbon and Madrid as a place to be. And John, it is a boom emotion now in America. You go
Hang on a minute. You're saying Spain's known now because of Madonna.
No, the whole American investment thing to Portugal and to Spain came off one interview with Madonna.
What's Portugal got to do with this?
Two different nations.
No, it's people moving over there to the point where they've shut down some of the ability to buy real estate.
Oh, that's what you're talking about.
Yeah.
Like the golden visas to buy.
All of that. Madrid, and then you go down to Seville and.
I'm sure Madam Vice President can hook you up with a visa, Tom, if you'd like to purchase the property in Madrid.
We'll hear on the break.
Vinky Charter at Deutsche Bank on the equity market coming up shortly. I'm sure we'll watch the football, we'll get season tickets. Oh, great.
Great. Tapas.
Probably pay less in taxes versus New York at the moment.
Right.
You see how much money you can save just by moving to Miami?
Welcome back to another special Roland Garros update from Bloomberg TV and radio from Tennis Channel. I'm Andrew Guy. Defending champion Iga Swiatek is just one win away from claiming her third title at the clay court slam after she got past Beatriz Haddad-Maia in straight sets in her semifinal Thursday. She'll face Karolina Muchova for the title. Friday, Novak Djokovic faces Carlos Alcaraz in the match of the season. Watch it all exclusively live on Tennis Channel. Our coverage starts at 8 a.m. Eastern.
From the world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of power. Live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue. He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with 2 more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Yes. Not keeping, look, people have conviction, or they invest if they invest for the right reasons, just keep at it.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question its industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
You have excess savings dissipating by the end of the year. You have student debt payments coming back. And so we think it's a consumer that looks a lot weaker by the end of this year.
We're in a world with higher inflation, and we've reset.
One conviction view that we have is this higher for longer narrative globally.
I'm still optimistic that the market is going to move higher by the end of the year into next year.
Ultimately, if you do go into a recession, bad news is bad news.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on a Friday on radio and television. We are resetting early for the mid-year look at June 30, resetting into an inflation report next week, into a Fed meeting next week, and resetting into a VIX, John, of 13.67, still a bull market unloved.
Binky Chowdhury at Deutsche Bank looking for more of the same, looking for 4,500 on the S&P 500. If robust earnings continue, capital return program should continue as well, and this equity market can grind higher, Tom, from here into year-end.
It grinds higher, and the backdrop is interest rates, and there's a huge ambiguity here between three ideas. Interest rates stable, we're hearing that. Interest rates higher, we're hearing that. And there's a quiet group out there looking for substantial disinflation. I'd say they've had an off 10 days.
There are others who are looking for the long and variable lags to bite, and they've had an off 2023. They're sticking with it, though. They believe it's coming, and ultimately earnings are going to get hurt, Tom, later this year.
Tips percolating. I've had two guests this week talk about tips as being attractive. That inflation guesstimate, 1.54% on the 10-year tip, Lisa. And it's just out there is bond people seem to be hyper flexible now, trying to find the next trade.
And trying to understand where the distortions are at a time that people are betting on both immaculate disinflation, a tight Fed, and a sort of soft landing that delivers no pain. Something doesn't add up, right? Someone is wrong here. And so people are trying to arbitrage the places where there seems to be a little bit more consensus.
John, the confusion of the morning, you nailed us with Dan Ives and Tesla here. We got a Musk-Barra love fest.
Oh, big time.
Of a PE of 68 and 5. I can honestly say I've never said that.
Tesla up by more than 90% year to date. Tesla, one of the big winners of the year, along with the likes of Meta and what's happening elsewhere with
Facebook.
NVIDIA. these 5 names now make up about a quarter of the index on the S&P 500. There's been tons of discussion about narrow leadership, and Lisa brought this up a few times this morning, and we need to keep on building on it, Lisa. Are we seeing signs so far this month that this rally is starting to broaden out into the Russell, into the small caps, into other parts of equities?
The answer seems to be we're seeing signs. The question is how durable they are, and you're absolutely correct to bring that up because we are seeing the initial inklings that perhaps this is something sustainable. I keep going back to what Michael Purvis said, which is if you have fund managers that have gotten it wrong all year and they look at the headline number, which is distorted by this top-heavy AI trade, they're going to catch up with everything else, right? And so at what point does it bleed out by de facto?
Did we begin to see that this week?
Strip out the 7 on the S&P 500. Michael Hunt of Bank of America, the S&P this year's down. If you strip out the big 7, have we seen it this week? The Russell's up 7% this week. We've seen it this week. I don't know if we're going to see it next week and a week after that. Binky gets paid the big bucks to give us the answer to that one, Tom.
I'm gonna do a data quote here, John. I've got to do it in honor of Mr. Taleb. What a joy yesterday.
How was that?
It was spectacular.
I caught a bit, Tom. Well
we
done.
haven't seen each other in ages, and Nassim was heated. And of course, on Bitcoin at 26,000, he was scathing. There's no other way to put it. It's been a big, we haven't talked about it this week, but a big shift by Gary Gensler. What's the data look like, John?
Equities just about turning positive almost for a moment in time, now unchanged and slightly negative on the S&P 500. Yields a little bit higher by 3 basis points, 375. I think we'd all like a quiet session going into the weekend, Tom, and come out the other side and focus on CPI and the Federal Reserve after that.
At Deutsche Bank, for David Folkerts-Landau, setting the intellectual structure on equities and asset allocation. Chief Global Strategist Binkem Chadha joins us this morning with DB. Binky, you nailed the bull market. It took a while to happen. The Chadha market, the Chadha bull market took a while to happen. And with a vengeance, you nailed this. And when we were talking, going live here, you made clear 10% of the people have participated and 90% of the people have been left behind. What's the next leg look like for 90% of the people that have missed this October market?
Yeah, so, I mean, for them, and the distinction that I was drawing was, we've had to move up in equity positioning. So we have a simple sort of Z-score plus minus 1 band. And we were at the bottom last year. That was the reason for the call for a positioning squeeze. Positioning today is sitting in the middle of the band. But the entire move in positioning up has come really from systematic strategies, as vol has come down from extremely elevated levels to still very elevated levels outside, I would say, especially driven by really rates vol. Discretionary investors, which, in terms of assets under management, or I would say 8 to 1 in terms of relative size to systematic strategies, their positioning has been what I would describe as firmly underweight for the last year in, a very narrow range.
Can I translate? Firmly underweight is polite shot attack for long.
So the participation has been, minimal to zero to non-existent.
Be nice,
this week, what we are seeing is basically some move up in what we put in our positioning measures, but it's really a sentiment indicator, and that's the AAII bull-bear spread. And that's moved up for the first time. Whether or not that actually translates into increased allocations, we have to wait and see.
The call from here, from where we are at about 4,300 out to 45, just reading your research last night from the last week or so, it feels like it's all about earnings. Can you pair this view about earnings with what's happening on the other side of the research team with Matt Lazzetti and Deutsche Bank ultimately looking for a recession? Can you pair the two views at the moment, Binky?
Oh, absolutely. So that's really easy because they are the same view. The view. So my earnings numbers tee off of our house economics forecast, but with a small twist, I would say. Remember that the S&P 500 gets 30 to 40% of its earnings from the rest of the world. So I have, a sales-weighted global GDP measure. Obviously, for U.S. equities, the U.S. economy matters a lot. We have a framework. I'm going to leave that aside for a second as to exactly what it is, but it tees off of basically our house economics forecast. So it's really a translation issue, if you want. It embodies a recession in Q4 and Q1. The things to note about it are that the forecast is for a pretty mild recession. Number two, we do have growth happening until then, and that means that the recession kicks in from a higher level in terms of earnings. And what I would emphasize is that the equity market, when it looks at aggregate earnings, like the S&P 500's earnings, tends to look year on year. And year on year, we are still negative in terms of growth. It's slightly less negative than the prior quarter, but it's still negative. But remember that when we look at all macro series, we look quarter on quarter, which in equities we call sequential growth. And our estimate of sequential growth in S&P 500 earnings in Q1 on a seasonally adjusted basis is a solid 5%. And I would emphasize that's not annualized.
Markets are not the economy. And you have to just keep repeating that. Markets are not the economy. Markets, John was mentioning that earlier. And I am wondering whether this could be the start of a bull market, even though the U.S. has not yet had a full-blown recession.
Yeah, so there's two sort of elements about the recession that I would emphasize. This is arguably the most well-telegraphed recession. Recessions, in my view, in terms of their impact on financial markets, are not really about, a couple of quarters of negative growth where everybody agrees that it's modest and temporary, because the market's going to look through that. The market's meant to look through that. If you listen to corporates on earnings calls, we're at the point where we've been talking about recessions for at least the impending recession basically for at least 3 quarters. And so, corporates are, already responding. And the idea I would put on the table is that, it's very possible that the recession slowdown, part of that has already, been brought forward, if you want. If a recession is very well anticipated, it's not very, there's little shock value to make you risk averse. So there will be some negative impacts, but a lot of the multipliers come really from risk aversion. And it's the concept of anticipated risk aversion. An anticipated shock is not a shock.
Just to tie this all together and to end where we began, do you think that we are seeing durable signs of a broadening out?
I think that it gets pretty choppy from here, because the positioning squeeze that I spoke about at the beginning, that's mostly basically been done. I mean, as as Tom mentioned, VIX at 14 and 13, the biggest driver of systematic strategies is decline in vol, and we are not looking for vol to really go down from here. We are not really looking for discretionary investors to raise their positioning, because as you said earlier, there's this very long list of concerns that they're focused in on. And I don't think the resolution of those is easy. So we're going to continue to have a tug of war, but the demand supply, the positioning squeeze is done, but the demand supply balance still looks, constructive. So I would say a grind higher, 4,500 by year end, but it should be pretty choppy.
Extrapolate out.
Soft landing will easily give you 5,000. Yeah, we've said that before. We've published that before.
Binky's so measured. Binky had a tough year last year, same tone. Great year this year, same tone.
He had a tough year last year because you make the call, but the x-axis you never know.
So the life of a strategist, Binky, just quickly.
Yeah.
Does it feel a whole lot better when things are going right, or do you get nervous that things are about to go wrong? Are you constantly paranoid? How do you think about it?
I'm constantly paranoid.
What is it like?
You're asking me this on air.
Yeah. What's your approach to that? Last year was tough. I've talked about that with you many times. This year is better. How do you approach things when you're right?
The same way as you approach them when you're wrong. You ask yourself, what have you got right? And I mean, are you right for the right reason? And what have you got wrong? And you adjust your view accordingly.
What was the lesson from last year that helped you with this year?
The lesson from last year was a confirmation of my view early in the year that we would get a massive amount of anxiety from the Fed, but the anxiety was of their own creation, because they decided for a variety of reasons to wait a long time. So when I listen to the FOMC now, I hear calm. I mean, and that reaffirms my view that a lot of their nervousness, yes, about inflation, still about inflation, but they were at 0 to start the year. We're now at 5, and so there's a lot less reason to be anxious.
Excuse to get out of the triple leveraged all cash fund. I mean, first order, 100 shares of NVIDIA.
Hey, Binky, this was great. Yeah. Tons of respect for you. It's always great to catch up. Binky Chowdhury there of Deutsche Bank. Coming up on the Open, Mohammed Al-Arian. On the Fed next week, Daryl Cronk, Wells Fargo, Michael Kushman, Morgan Stanley on This Market, Sarah Hunt of Alpine Saxon Woods, all coming up in the next hour on Bloomberg TV.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Relief is in sight. The National Weather Service says heavy rainfall in parts of the eastern U.S. on Sunday should help dissipate much of the smoke choking the region as a result of the Canadian wildfires. Air quality is already showing some signs of improvement, with the level in New York City returning to moderate overnight. Still, conditions remain unhealthy for many cities, spanning from North Carolina to Rhode Island. Donald Trump has become the first former U.S. president to be charged with committing federal crimes. A grand jury has indicted Trump in connection with his refusal to return classified documents found at his Florida home. If convicted, he could face prison or be disqualified from holding public office, including seeking to recapture the White House in 2024. Most economists expect the Federal Reserve to pause interest rate increases next week for the first time in 15 months and leave policy on hold through December. According to economists surveyed by Bloomberg, the Federal Open Market Committee will keep rates steady at its meeting at the 5 to 5.25% rate. Officials face a closer call on what to do in July. I'm Lisa Mateo, and this is Bloomberg.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. This Wednesday, will the Fed pause or hike?
The steepest tightening cycle since the 1980s may be about over.
It's a we've never been here moment.
And where will they go from there?
They may leave the door open to additional rate hikes.
They say pause, and this market hears cuts.
Trust Bloomberg for the fastest coverage and exclusive analysis.
What could potentially torpedo this?
You're not really seeing the slowing in the labor market.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg, your global business authority.
Mr. President, what do you say to Americans to convince them that they should trust the independence and fairness of the Justice Department when your predecessor, Donald Trump, repeatedly attacks it?
Because you notice, I have never once, not one single time, suggested to the Justice Department what they should do or not do relative to bringing a charge or not bringing a charge. I'm honest.
And that will be replayed in the coming months, and particularly Tuesday of next week, when we are supposed to have a summoning of former President Trump to a federal court in Miami. Tom Keene and Lisa Bramwitz with us. We've talked a lot this morning about this news that occurred last night, the appearance by President Trump as well. We're going to digress from that right now because this is important. There's times where you stand at Bloomberg and two people are talking and you go, well, this I really need to listen to. Amory Horton yesterday in conversation with a gentleman out of New Trier in Chicago, Auburn, NROTC, shockingly competent with the United States Navy in our intelligence efforts abroad. And Amory, I want to focus with your conversation with Admiral Rogers on the Pacific Rim. I was spellbound by the acuity of the discussion. Tell us about it.
Well, I think what was so interesting speaking with Admiral Rogers is because this is an individual who has nearly 40 years experience at the Navy. And when you talk about and just see headlines about, say, a U.S. warship in the Taiwan Strait coming very close to a Chinese vessel, you potentially think, how does this happen? How does this work? And he actually can explain to you, because how ships move so slow, the distance between that obviously had to be a provocation. He's able to take these moments we are seeing in time and extrapolate them and explain why it matters so much at this moment to a business community. And I think really for him, what he sees in the national security apparatus is it's no more just about hardware in the military, that you actually need individuals with top-notch economic minds when you're trying to deal with the geopolitical issues of today, not just China, but also what we're seeing in Russia.
What about the geopolitical issues of the Beltway and Washington? I mean, we're not asking the Pentagon to solve the firestorms of Quebec, but is the Pentagon, within your reporting, feel like they're on their own because of the gridlock and the political debate to the election in Washington?
I don't know if I would say they're on their own. I think the Pentagon has always tried to take a above politics approach. Obviously, they're in the news very much this week, last week, because of all the talk around Congress and the White House regarding the debt ceiling drama in that bill about caps on where you want to have defense spending. And that's going to be a huge story going into the end of the year, because to get that bill over the Senate, you had defense hawks basically being promised they're going to have supplemental bills to make sure they can get more money to the Pentagon, and McCarthy saying that might not
Lisa,
fly.
that's Anne-Marie Horton talk. And the answer is Admiral Rogers was talking yesterday, and you felt like you were on one of those two boats.
Yeah.
In the Taiwan Straits. I mean, it was stunning to get away from the Beltway blather to somebody who actually knows what they're talking about.
War is cold and soft. All others are won by logistics, not by anything else. It is about the actual tangibles of the experience. And I do wonder, this is where everyone's focus actually is on, even in the investment world. I was speaking to someone yesterday who was saying it isn't the Fed, it isn't these sort of economic figures, it's geopolitics, and it's what we track forward. How concerned was the Admiral about what is transpiring, how we are sort of shaping up right now?
Well, me and the Admiral joked, and Tom was there. He heard it. It was quite a depressing conversation if you're looking at all the geopolitical risks that are emanating around the world right now. Obviously, there's Russia, invasion of Ukraine. Where does this lie? What does the future of this look like? He brought up the fact that maybe this becomes a frozen conflict. I think more people are starting to feel that that potentially is going to be the end of this. It just doesn't end, but it doesn't become a hot war.
We call that World War I.
Let's hope not.
and then obviously China. And this for the business community is paramount, right? Because the economies of these two countries are so ingrained. The trade is at all-time records. They have tons of investment in China. And really what so many strategists and individuals that look at geopolitics and implications for the economy are trying to learn about the lessons from Russia and what that could mean for China.
We're talking about this, and it sort of is a digression from the news of the day in terms of the potential Trump indictment, according to sources that we have not yet seen the full documents of, and what that means for the whole Republican election. I am wondering, though, how that does dovetail into the U.S. perspective internationally. How much of the theater in the U.S. actually does have a material difference to what the rest of the world does with its dealings?
Well, listen, the rest of the world, and I've spoken to a number of individuals abroad, they are so focused on 2024. They have individuals in the United States, even traveling the country, trying to figure out what the U.S. will look like come November in 2024. Who will be the next president of the United States? Is it another President Biden? Is it another President Trump? Or is it someone else? And this is incredibly important for Western allies. It's incredibly important to the decisions they make now in terms of how they are going along with the U.S. when it comes to things like China. And then for adversaries, they want to know, say you're Putin. Will you want to know whether or not the Ukraine aid will continue at the level it has, or is that going to be pared down?
In the zeitgeist in the last 3 days, and I'm sorry, folks, I can't cite it. I don't have it in front of me, but I'm clear that I saw some form of article, mini article, that the White House is out talking to cabinet officers about what's your plan. Should we expect announcements over the week in Axios, over the weekend, into next week? Are we going to see ya from cabinet officers?
I don't think this is anything we're going to see immediate. What you see from the chief of staff, Mr. Zients, is that he doesn't want to deal with headaches at the moment when they're going into an election campaign. Because remember, if you're a cabinet posting, you need to go through the Senate. And these could be long, drawn-out processes, and they want to remain focused. So I think his message was, if you do not plan on staying till the end, give us the courtesy and be gracious and leave sooner rather than later. Stan Druckenmiller said to Shonali Bassick at Bloomberg Invest that he's rooting for the governor of Rhode Island. Is the Commerce Secretary, Ms. Raimondo, is she a potential candidate? I think
of some form?
When you look at how Secretary Raimondo conducts herself and her CV alone, this is just based on looking at her and talking to people who really do like her. She has great respect within the business community. She is someone that they pick up the phone and call. She was a governor. She's now a cabinet post. I think you can look at her and say, this is an individual who has higher political aspirations.
What's going to be the Sunday talk show discussion around Trump?
Trump. That's it. It's going to be all Trump. Whether if we get the indictment,
if we get,
let's hope. Let's hope it's that the Yankees are beating the Red Sox. But I think on Sunday, it really depends if we do get the indictment text today, right? And that
we could get it today?
Yes.
I did not know that. Okay. Yeah. That would be interesting. Fascinating. Emery Horton, thank you so much. And again, congratulations on just a riveting discussion, folks, with Admiral Rogers, Navy retired, here on what we're doing in the Pacific Rim. Lisa, we got to go through I guess the data, which tells you it's, to borrow from Greenspan, somnolent, oil at 71, West Texas Intermediate, DXY doesn't give you much love. But I just go back to the VIX under 14, and that colors every conversation. This bull market that's slipped up on a lot of people, as Binky said, or not in the bull market.
The somnolent rally to a bull market, right? I mean, that seems to be what we've been doing, although it has not been somnolent in the tech shares, in the AI-related shares, and that seems to be what's driving everything.
Well, I mean, it's there, but there's been maybe a bit of rotation. It sets us up for an interesting June and really gets us to that key data point. I believe it's June 13th, the inflation report.
Yeah, which, again, let's see how much that actually changes the game, because right now we're looking at people who are basically pricing out rate cuts. It doesn't seem to really matter for equity valuations that are driven by this hype and this belief in American dynamism and what we're going to see with the AI developments.
We'll have to see, and I'm also going to point out we've been very quiet on housing, which has had a respite from 7.15-ish% down to 7.05%. 30-year mortgage, maybe we'll get that to move up higher. This conversation will continue, and coming up with Citigroup, he has been dead on about higher interest rates. Hollenhorst of Citigroup. Stay with us on radio and television. Good morning.
for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Bloomberg Surveillance, good morning. Again, an inflation report. We'll see that next Tuesday as well. We're adapting on a Friday to not being in the market. Triple leveraged all cash fund. Missed that puppy, didn't I? Red and green on the screen, the VIX 13.65. And because of the importance of this conversation, you know what? We're going to truncate the data check. And Lisa's got intelligent words from the guy at Citigroup who was so right.
Well, this has been really the big debate. Everyone sort of priced out the idea of further Fed tightening after what happened in March, and he stuck with it. He said that the economy was still strong, and here he comes today, Andrew Hollenhorst and the team over at Citi, still maintaining their call that next week is not off the table. The Fed is going to raise 25 basis points, writing, quote, the Fed remains on track to revise up GDP and core PCE inflation projections and lower their forecast for the unemployment rate. Dots for 2023 will need to move higher to avoid communicating that policy is unresponsive to data. In our base case, the Fed will hike 25 basis points and raise the 2023 median dot by at least 25 basis points. How do they do this, Tom, without surprising the market, which is something that they don't want to do in a disruptive way?
Or how the market adjusts as well. Let's dovetail the finance and the investment part of this into the economics of Andrew Hollenhorst, Chief U.S. Economist at Citigroup. If we get a Hollenhorst call here and you've been shockingly dead on, what does the 10-year yield do? Should amateurs just assume the 10-year migrates up to a Hollenhorst level, dare I say, 4.5%, even 5%?
Well, I think you're zeroing in on exactly the issue for the Fed is they keep pushing higher with policy rates, but it's very hard to get traction on the 10-year yield. It's not clear at all that the 10-year yield would move significantly higher. Because the more the Fed raises policy rates, the more the market is going to price that the U.S. economy will go into recession, that inflation will come down, and that the Fed will be cutting rates. So the Fed really has to communicate both that they plan to continue raising rates, and then they plan to continue to hold them there. They're trying to communicate that, but that's not coming through to the market.
So this is critical, and I go to Anna Wong's wonderful work on Chicago with Bloomberg. Her brilliant call dovetailed with you, and frankly, Dudley of the New York Fed, now writing for Bloomberg Opinion, which is all of a sudden the time continuum matters. It's not about going from this level to that level. How have you adjusted the longer at a given rate?
Yeah, so I think that's really the margin that we might see the Fed trying to play with more now, because it is the case that policy rates are getting to levels that are close to restrictive. A lot of last year was about getting to that restrictive level. We're probably not quite there yet, but there's a sense that we're getting close. So now the Fed is in a much more difficult scenario, I think, because they have to guide to keeping rates higher. They can do it with the dots. That's what Lisa was mentioning, that the 2023 dot can come higher. I'm not sure that they're going to do it at this meeting. a way to strongly guide that you're going to leave rates higher for longer is to raise that 2024 dot to indicate that in 2024 you would actually be leaving rates higher for longer. I'm not sure they're there yet.
Bramo Cam's over here. She's laughing at me.
Well, I mean,
She knows how much I disagree.
Well, no, instead of talking about the dots, the signaling between moving this one up and that one up, why not just raise by 25 basis points? And that seems to be your view. That sends a pretty strong message. And yet that would go against historical precedent for this Federal Reserve that is not looking to surprise markets and has signaled every which way they're going to pause.
So look, to your point, the simplest way for the Fed to indicate a hawkish or dovish bias is to do something. And that's always been the case. That continues to be the case. Raising 25 basis points next week would be a very clear way to send that message. It's not that big of a surprise for markets if they were to, for instance, raise 25 basis points in June and signal maybe they would skip July. Well, we have about 20 basis points priced for those two meetings, so it maybe wouldn't be a huge surprise in that respect. Remember, we also have a CPI reading upcoming. But I think you're focusing on exactly the right thing, that it's very hard to get markets and the public to buy your guidance for what you're going to be doing sometime in 2024 because there's so much uncertainty. What you can do is to do something today, to do something next week. That would be a strong way to send a hawkish signal.
One of the biggest divergences right now among the people who we speak to is what they believe inflation is doing, whether they do believe it's stickier, whether there's going to be this sort of disinflationary kind of trajectory that we've been hearing about from a number of different shops. I'm just wondering how you view the market's reaction if the Fed does not hike rates next Wednesday. Will you see a bleed up in yields in the long end, a sort of unmooring of inflation expectations?
I think you could. I don't know that next week is going to be the pivotal moment when markets kind of realize that maybe inflation is going to stay persistent for longer and the Fed's policy isn't going to be as effective as has been priced in. But you go back to just the basics of how they're going to adjust the forecast, like you were talking about with GDP growth coming up, with core PCE inflation being revised up to some extent. Just raising the dot for 2023 25 basis points, if you're revising up inflation 20 basis points, that's just kind of staying even with where you were. If you don't do that, it's actually dovish.
I'd love you to comment on what we were talking about with Kathy Jones from Charles Schwab about this idea. What does it tell us that the economy has been so resilient, even though the Fed has raised by 500 basis points? Does it tell us that the long and variable lags, as John said, are longer and possibly more variable? Or does it tell us that this is an economy with way more momentum than anyone had ever imagined?
Yeah, I think the issue for the Fed and the issue for all of us analyzing this is that probably both of those are true to some extent. So you've seen in the housing market, we've already had the maximum power of tightening where we got mortgage rates higher, we got housing activity that slowed down, but now it's bottom, now it's coming off that bottom, now house prices are coming up again. So in that sense, it's not a lag issue, it's just that the power that was in the economy was too great to be overcome by 500 basis points of rate rise. But then you also have a lag issue, and I think if you think about what's happening with the banks, for instance, we do expect some drag from that tightening, but that's going to play out with a much longer lag, and that's going back to March. I think some people were looking for an acute tightening of credit conditions. That didn't happen. We didn't have the acute credit crunch. That doesn't mean that we're not going to have more restraint on bank lending, but that can take a year or longer to really flow through to the economy.
Michael Woodford, Interest in Prices. You're the only one I know who's ever read the book. It's 948 pages, and everything there is about convergence, about this. Right now, getting to Tuesday, core CPI with 3 exponential moving averages is converging to 0.4%. That's a lot of math talk where we've really reached a stasis on inflation. What could that signal for you Tuesday if we break out of that convergence?
So I think that's what we're all looking for on that Tuesday. Does core CPI inflation come in 0.4%? That's about what the market is expecting. That's still well above the 2% target, though. That's close to 5% annualized rate of inflation. So 0.4%. I think we still price some probability that the Fed hikes. Maybe they do. Our base case is that they do. If you surprise to the upside, though, if we surprise to the upside and we get a 0.5% reading, and even if that's because it's used car prices that went up more than expected, I think just optically it becomes very hard for the Fed not to hike.
What about the other way? We go the way of Ed Hyman and David Rosenberg. They don't agree with Andrew Hollenhorst. If we break to 0.3%?
0.3%, and there you could have a
I've
Fed.
never had this conversation. This is how stupid this conversation is.
It is where we are. It is where we are. 0.3%, and the Fed may point to that. They may point to the rise in the unemployment rate, right? And that we're really kind of, picking and choosing our data here and say, you know what, we're going to skip in June, but we're probably going to be hiking in July. Now, I think that's a lot harder to communicate.
This is
but
ridiculous.
They can pick and choose and do
so much more intelligent. Greenspan's carrying a ham and cheese sandwich. What's it mean?
Well, again, was that more intelligent?
Yeah.
The problem here is we don't understand the parameters. I keep going back to that. We don't know what economy we're going back to. We still are dealing with pre-pandemic or really post-pandemic distortions that are creating long and variable lags with respect to the stimulus as well as with respect to the Fed tightening. Do you have a reset expectation of the parameters we're going to settle out in? Will it be a higher inflation environment with perhaps higher interest rates for a longer period of time, or are we going to rapidly disinflate at some point far out there?
I think the risks are that we end up in a more inflationary economy. And you heard Bank of Canada officials talking about that yesterday, this idea that inflation just structurally can be stronger now. And we're seeing some of those indications already. Some of this is geopolitical. Some of this is just the fact that we now have a more supply-constrained economy, and we're really not used to that. For many, many years, we had an economy where there was plenty of supply, and the issue was demand. Now we have these more real supply shocks, and that's going to be a more inflationary world.
Are higher rates stimulative on the edges? Basically, that people can actually earn something from their money, and then also you're getting, just nominal growth in revenues that will help foster some of the dynamism and won't necessarily create this relationship that everyone thought yields up price of everything, risk down.
Yeah, it's a great point. I mean, there are winners and losers when interest rates move higher. There are distributional consequences. You're moving income around within the economy. But the net effect is still a tightening. I think the net effect of higher rates, even though savers will do better, borrowers, it will be more difficult, the net effect is going to be a tightening.
From where you sit, and we've had a glorious week here talking equities, including Citigroup equity as well, how do you link your economics to your equities strategist? I mean, I know you guys don't talk, you hate each other and all that, but how do you link your world to the stock market world?
So, we talk regularly, and
Greenspan made a big deal about this.
Yeah, we talk about whether you can reconcile, what's priced in fixed income markets, what's priced in equity markets, and what the outlook for the economy is. And I think the way you can best reconcile the three is to have an outlook for some kind of a soft landing. And unfortunately, that's not my outlook. That's not most people's outlook. But it is hard to see how you're going to sustain very low levels of equity, implied volatility, high levels of equity prices, and have a Fed that is fighting inflation that remains persistently too high.
I mean, the inflation call that you've had is brilliant. And to Lisa's point, at some point, it breaks out there. What will be how does the Fed, we've never been here before. The Fed has raised rates as we've never seen. We've never had an analog where they have to cut rates after that kind of first derivative move. We've never seen this.
Yeah, and it goes back to what we were talking about before, that Fed officials, I think, will be quite reluctant to cut rates. It doesn't mean that they won't. Once you see clear evidence that the labor market is loosening, that inflation is really on a downward trajectory.
What's your unemployment rate to make that point happen?
I think they certainly need to be
above 4,
and probably above 4.5%. If you look at their own projections would have had unemployment at 4.5% at the end of this year, and they still would have been holding rates.
So what's that on a non-farm payrolls basis? Do you have to have negative non-farm payrolls?
You need to have negative non-farm payrolls. 339,000 new jobs is not going to do it.
That's a Hollenhorst statistic, the way down. Congratulations on just an extraordinary and persistent call here of what this Fed has done. Mr. Hollenhorst is with Citigroup. Red and green is, Lisa, there's a lift to the market. Hollenhorst driving the market higher.
I don't know if I would really characterize it as that, basically saying the Fed will be more hawkish. But yeah, there definitely is. The melt up, the melter of all melt ups, as Ed Yardeni said.
Coming up, lean forward, Jeffrey Curry, Goldman Sachs on oil.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Relief is finally in sight. The National Weather Service says heavy rainfall in parts of the eastern U.S. on Sunday should help dissipate much of the smoke choking the region as a result of those Canadian wildfires. Now, air quality is already showing some signs of improvement, with the level in New York City returning to moderate overnight. Still, conditions remain unhealthy for many cities, spanning from North Carolina to Rhode Island. Tesla shares are poised to rise for a record 11th consecutive session, matching the stock's longest winning streak set in January 2021. That after General Motors said it would adapt its electric vehicles to Tesla's superchargers. It follows a similar move from Ford. Tesla shares have risen more than 90% so far this year. Former Barclays CEO Jess Staley has been out of sight for more than a year and a half as the revelations about his relationship with disgraced financier Jeffrey Epstein piled up. But in New York this weekend, Staley is scheduled to give his version of events for the first time. A pair of lawsuits allege he witnessed an assault on a young woman and may even have participated in a sex trafficking ring run by Epstein. Staley's lawyers deny those allegations. OD Asset Management is in talks with some of the world's largest investment banks, hoping to convince them to stick with the London firm. Several began distancing themselves from Modi after new allegations of sexual assault surfaced against hedge fund manager Crispin Modi. Morgan Stanley is cutting ties, while JP Morgan and Goldman Sachs are said to be reviewing their links with the company. Modi CEO Peter Martin says the firm's lawyers are looking into the claims. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From business's most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Actually, I've been a critic of Bitcoin. It's a fad. I mean, the claims they make that they're a refuge are false, that they're good for transactions is false. They're not even attracting the bad guys anymore. And you know that the Federal Reserve can very quickly replace these cryptos.
My first project with Bloomberg, even before I wandered into the building, was with a guy named Dylan Radigan, long ago and far away. Dylan Radigan called me up and said, we've got this guy who's a quant guy, and he's got a book out. Is this going to be a big or a small deal? And I think they had to move the venue 4 times because 1,200 people showed up for Nassim Taleb. I will tell you what I finished yesterday at Bloomberg Invest. Here's where you start. Fooled by randomness is what started it for Nassim Taleb. There is no one I know in our universe who has published so consistently and so excellent and there with his heated opinions. on Bitcoin. Jeffrey Curry's going to come out with his version of Fooled by Randomness on oil, global head of commodity research at Goldman Sachs. Jeff Curry, I say this with immense respect for your bulletproof University of Chicago microeconomics and econometrics. How did oil fool you by its randomness in the last 12 months?
Well, I have to say, we have never been this wrong for this long without seeing evidence to change our views. Obviously, some of the upside has been taken away by recent events with, the sanctioned oil surprising to the upside, whether if it's Iran, Russia, Venezuela, and more destocking. But the core thesis still very much remains intact. And I think one of the big drivers is, you've lost 250 million barrels of paper length in this market. We're back to where the market is as short as it was during COVID when we saw negative prices, and you've erased the overall length going back into the early 2000s. And I chalk this up to, ultimately a broad, what we call the great destocking. High interest rates are forcing destocking of physical barrels, destocking of sanctioned barrels, destocking of SPRs, destocking of finished goods, even destocking of financial paper barrels. So we have been just continuously selling for about 6 months to 9 months now.
Can you elaborate a little bit? Because for people who are not in the nitty gritty, a lot of what you said was perhaps a bit opaque. The connection of high interest rates to a lack of interest in buying oil on a whole range of areas, or a lack of sort of stockpiling physical or paper crude.
Let's go through the economics. Let's say to borrow money today to buy a barrel of oil, because you got to, finance your physical inventory. Let's say it's 7-8%, somewhere like that. LIBOR is paying you 5.25%. That's your opportunity cost of putting your money into a risk-free investment. So your net cost of holding physical inventory runs somewhere around 13, potentially even 15% in this environment. Why are you going to do that? You've got NVIDIA and NASDAQ going up. There's so many better places to put your money. And I think the other point too, oil, copper, and the rest of these markets don't have a positive carry. So they cost you to own it, cost you to store it. You're going to drain down these inventories as much as you can. So oil, copper, they are a liability right now. They are not an asset. And until they become an asset, no one's going to want to hold them in an inventory or hold them in a paper form. And so you could just think about that the cost of holding these commodities has risen so much that ultimately you're destocking. Now, we've been waiting nearly a decade for the Iranian floating storage to discharge. It's finally discharging right now, which tells you nobody really wants to hold this commodity. We think that's going to change. And I think it has to start with lower inventories, forcing what we call a backwardation, which is a positive carry in the curve. Then somebody will want to own it.
This is fascinating because for years, people were decrying the financialization of crude as sort of a bet on the macro economy. Are you saying that it is no longer in the same kind of way, that this is basically where it is traded, but it's actually a liability now that the financialization has come to such a place where people look at it as comparable to an interest-bearing type of instrument, and you're waiting for some sort of, not I want to say crisis, but a complete lack of inventory to spur prices in such an extreme way that you get a violent shift up that really forces the hand of people who are left kind of in the dust?
I'm not going to say it's 100% interest rates. It's fear of recession, why people don't want to own these. The government discharged their reserves due over fears of inflation. So there's other factors at play here, but I think your broader point is absolutely right. We think about when was oil financialized? In the 2000s, when interest rates, it was right after September 11th in 2001, when interest rates first went to near zero. That's when you started to see the explosion in the financialization of oil and commodities. And we stayed into this loose money environment for nearly 15, 20 years. And now money costs something.
There are a set of world-class leaders, and you're one of them, Jeff Curry, on this, and with the acuity of the what I'm going to call almost the general equilibrium theory of hydrocarbons. You parachute into Riyadh right now, and you have to advise the Saudis on the elasticities of supply and demand around this new world, which is the old world of a cost of money. How do you advise Saudi Arabia in this new world of higher nominal and real interest rates?
Their market power has never been higher. And one of the reasons why is you combine the higher cost of money combined with issues around the cost of funding hydrocarbon type of investments. They're the only game in town. They have no competition right now. When we look at the cut they made in October, that was the very first preemptive cut we've ever seen OPEC do. And we just saw 2 more cuts announced in the last 3 months. Mm-hmm. Why? Because they don't have fear of competition. Yes, the oil that's coming on market is Russian, Iranian, and Venezuelan sanctioned oil, and eventually you'll run out of it and there's nothing behind it. But is there competition from the rest of the world? The answer is really no.
Is the United States not ignorant but unaware of the international dynamics of oil, of moving oil up to Japan across the Pacific Rim, and all the dynamics of the Middle East? Have we gotten lazy?
I think there's a bigger focus on immediate term issues, things like inflation fighting, which is why we saw such a sharp rundown in the SPR. And you put all the SPRs together, it was 250 million barrels drawn down. That is a lot of oil. So I think the focus from a policy perspective is get the inflation down and keep it down. But here's a fact I like to throw out. You look at core CPI, it's somewhere around 5.5. It was at that level, going back nearly 2 years ago.
Yeah.
What's changed is oil prices went down, taking headline from 9 down to 4.5.
Just quickly, Jeff, do you think that that's the reason why the U.S. is not refilling the SPR more aggressively, because they're still concerned about inflation and that could, on the margins, push prices up?
Well, I think with, the showdown over the debt ceiling, getting money to go buy oil would be really difficult to come by. But that aside, listen to France, listen to Germany. The focus now is building strategic reserves of green metals, like battery metals, like copper, lithium, cobalt. So if you're going to build strategic reserves, you're probably going to do it in, the green economy commodities, not in the old economy commodities.
Jeff, where's oil in a year? I know it's an unfair question given all the ambiguities out there right now, but I've got to ask. I mean, we're down, right, wrong, whatever. Scope out where we are in 12 months.
Yeah, our view is you're going to see substantial physical inventory draws because of these OPEC production cuts, particularly during third quarter as well as in fourth quarter. That's going to push us up into the low 90s. Now, the question is, will you bring the investor back into this market? And by the way, I put a question mark on it because it'll have to be a new class of investor. It take that investor buying to push you back up towards 100. We're not, I know a lot of them have gone left and it'll be difficult to get them back. But I think the key question, fundamentally, we can get this market higher. And I think once you turn oil into an asset, you'll attract capital back to it. But I don't think it's going to be the same cast of characters.
Jeffrey Curry, thank you so much. Just absolutely brilliant there with Goldman Sachs. And Lisa, this really rolls over to Shonali Bassett's conversation yesterday with Mr. Waldron of Goldman Sachs. They're both talking about what you've talked about so much. Guess what? The world's changed. There's now an interest rate. It affects equities, bonds, currencies, commodities, and West Street downtown.
It was just fascinating. I really want to spend some time thinking about what he just said, the financialization going into reverse of the crude market.
In the next hour, Mohammed El-Arian is on. He's not with Bloomberg Surveillance. He's with another show. Stay with us on radio, on television. Good morning.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
In the middle of a massive exhibition center located on the western suburbs of Shanghai, where the annual car show is taking place. This is the first exhibition after the end of the COVID lockdown. We can feel a lot of excitement on the ground. Electric vehicle is going to be the new theme of the industry. Most of the European companies and Japanese car makers who are considered latecomers to the China EV party are launching their EV products. They are making their foray, intensifying competition in the market. For example, Volkswagen yesterday debuting their ID.7, which is electric vehicle rivaling the likes of Model 3, which is one of the best-selling products in China. And Mercedes-Benz, they are announcing the launch of their new super luxury model of Maybach, which is going to be a fully fledged electric vehicle priced at $200,000 each. Domestic players are also trying to maintain their lead in the market. BYD, for instance, unveiled its first luxury model called Yang1 yesterday. It's priced at about 1 million yuan. At the same time, it's seeking to gain market share in the mass market as well. Needless to say, attracting all the car makers to the Chinese market is the rosy growth prospect. Demand is surging. By some estimates, EV sales in China are on track to exceed 8 million units this year from more than 5 million last year. The future of the car industry is EV. For sure, no question about it. This is Charlie Zhu, Bloomberg News, reporting from Shanghai Auto Show.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself. Self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
This is Bloomberg.
Live from New York City this morning. Good morning, good morning. Let's get you to the weekend. Your equity market on the S&P 500 just about positive. Back in a bull market. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
From New York, coming up, the S&P 500 back in a bull market, GM delivering another win for Tesla, and Trump charged over secret documents. We begin with the big issue. The bull market is back, fueled by a tanker full of pessimism. The S&P 500 rallying more than 20% from an October low. And the bulls think there's more to come. Deutsche Bank's Binky Charter looking for 4,500, suggesting that while the move up in positioning this year looks done, if earnings remain robust, so will buybacks, and equities should continue to grind higher. As not even 3 of the biggest bank failures in this country's history have been enough to hold us back, Big Tech has been picking up the slack, and Big Tech just keeps getting bigger. The 5 biggest companies in the S&P 500 now accounting for a near record 24% of the benchmark. Bank of America's Savita Subramanian pointing out that Apple alone is now bigger than the Russell 2000. Elsewhere, the bears are still clinging to positions they've held all year. Morgan Stanley's Mike Wilson insisting the boom-bust period that began in 2020 is currently in the bust part of the earnings cycle. JP Morgan's Marko Kolanovic saying the consensus view that the worst of pressures is behind us will likely be proven wrong as the impact of monetary tightening worked historically with a lag and certain growth supports are waning. To discuss the closeout of the week, to start this programme, I'm pleased to say that joining us now is a good friend of ours, Mohammed Al-Erin of Queen's College, Cambridge. Mohammed, let's start there. Just how long and variable are these long and variable lags?
Well, let's start with a good week. It's been a calm week because next week will not be calm. Look, no one knows, John. Absolutely no one knows. There's a whole set of theories out there, some suggesting that the lags are quite short now because the market does all the heavy lifting for the Fed. The others that suggest that the lags are long, maybe 12 to 18 months. So we simply don't know. And I'm going to keep on repeating that there's lots of things we don't know and that we're only going to discover over the next 6 to 12 months.
One thing we do know over the last 48 hours, Mohammed, is that we've been whipsawed by 2 things. Surprise rate hikes this week, the RBA down under in Australia, our northern neighbours up in Canada, and then on the other side, whipsawed by soft economic data, jobless claims yesterday, showing some signs of breaking out. From your perspective, what are you putting more weight on right now? The surprise central bank decisions from elsewhere or the disappointing data we saw yesterday morning?
So I tend to put more focus on the former, on the surprise move by the central banks in Australia and Canada. Those are two central banks that had paused and now are back hiking because the data, not only the underlying data that suggests that inflation is sticky, but what they see ahead suggests that the inflation is going to continue to be an issue. So I put more emphasis on that. Having said that, I don't dismiss the jobless claims, but you know that jobless claims, this weekly series, is inherently noisy. So one would need to see the next 4 to 6 weeks to get a better feel.
I was looking at some labour market expectations and forecasts from Ellen Zettner of Morgan Stanley. Mohammed, her and the team are looking for 4% unemployment 4Q23. They're looking for 4.4 in 4Q24. Their expectation for unemployment is 12 months further out than where the Federal Reserve is at year-end. Year-end, the Federal Reserve's at 4.5. Morgan Stanley and Ellen Zettner get close to 4.5 12 months later. Mohammed, it's not just the decision that we're teeing up for next week, it's the projections as well. What do you think those projections are going to look like over at the Fed?
So I think they're going to correct yet again. They've been too pessimistic on the unemployment rate, and I think that they're going to correct that because I don't see us getting to where they think we're going to get by the end of the year. I think the unemployment rate will be lower. I think they're going to correct their inflation forecasts, and they're going to take them up yet again. John, if you talk about the labor market, keep an eye out for wages. Wage growth, depending on what you look at, is steady at around 5%, and that is too high for a 2% inflation target.
Would you expect that median dot then to come up in the dot plot on Wednesday?
Yeah, I do. I think they'll go there, but it's going to be, the press conference is going to be absolutely the most interesting element of next Wednesday.
What is it about the presser that you think is interesting?
So first, let's see where we start from. They have guided the market. As you know, a top Fed official guided us to expect a skip. And that will make sense if Tuesday's inflation data comes in well below forecasts. Why? Because this is a highly data-dependent Fed. Having said that, they haven't dealt with the larger framing issue. And you're not going to get me to front-run my FT article again. I'm going to have to wait till Monday. But there's a larger framing issue that is not being looked at. So how they describe that the skip, which the market expects, is going to be critical. Now, if they don't get favorable inflation numbers, they're in a really hard situation because they will have to surprise the market. So it's going to be next week is going to be absolutely fascinating. Tuesday, Wednesday is going to be probably the most interesting 24 hours, a little bit more, 36 hours that we've seen for a long time.
Well, you've got to give us a sneak peek now, Mohammed, because once you've publicised a different publication, the fair trade is to just give me a sneak peek of what's in that piece that comes out next week.
I think we've lost audio, John. I'm just kidding. No, I'm going to talk a little bit about how none of the three options being discussed, pause, hike, or skip, is an optimal one. Of the three, skip is probably the least optimal one. And the problem is that there are two much bigger issues. One, as you know, you and I have talked about this, what is the right inflation target for this economy, given what we're seeing on the supply side? That's an issue that has to be discussed in a very comprehensive manner. It's critical because if you've got the wrong inflation target, you will cause unnecessary pain to this economy. And then the other issue is how you make policy.
Well, let's build on that a little bit more, because, Mohammed, you've said repeatedly that they might have to tolerate a higher inflation rate going forward from here. You've also mentioned several times that ultimately, if you design that inflation target today, it wouldn't be 2, might be closer to 3. I caught up with some former colleagues of yours, some friends as well, over at PIMCO earlier this week. They put out their secular outlook, Mohammed, and they mentioned tolerating 2-point-something inflation. That's only part of the story. The other part of it is the appropriate time horizon looking out to just keep forecast 2 and accept something higher than that. Mohammed, how do you think about that dynamic now?
So the most likely path is that the Fed will keep on pushing back the 2%, still promising us 2%. We will get to a 2% target and tolerate something higher on that journey. That's the right approach to the journey, because if it tries to get us to 2% quickly, we will have an unnecessary recession and we will have unnecessary financial instability. So it is the correct thing to target higher than 2% for the journey. The big question is the destination. Is 2% the right destination? And the way we're going to get out of that is during the journey, we're going to find out that 3% inflation is stable. And if 3% inflation is stable, then the transition to a 3% target becomes much easier.
So how much damage do we need to do to the economy if 2% is still the goal and they remain committed to that? That's something we've discussed for the last 12 months. Chairman Powell, at the end of last August, talked about the pain that we'd need to see over in Jackson Hole in the economy and the labour market to get inflation back to target. Mohammed, I just wonder how good, how decent a case study of Europe is right now for our current situation here in the United States. Europe had no growth in Q4, it had no growth in Q1, and inflation is still a problem. Guy Johnson and myself were talking about this time yesterday. Mohammed, what can be learned from Europe's experience with inflation and negative economic growth over the last 9 months?
Not very much for the US, because the US has two huge advantages relative to Europe. They are less prone to an energy crisis, and they don't have the massive food price issue that Europe has. So I don't think you can extrapolate. You know, John, you've heard me say over and over again, and there's no need for the US economy to go into recession. You've heard me question all these recession calls that keep on being pushed further and further back as growth proves robust. There's no need to go into recession. The only reason we'd go into recession is if we get another Fed policy mistake. The US economy is vibrant. The labor market is doing very well. And there's exciting productivity enhancing technology being put to work as we speak. So the only reason you push us into recession is because you're pursuing the wrong target without being brave enough and open-minded enough to ask yourself, if I started today, what would be the right inflation target?
There's a big treasury market question in that as well, Mohammed. So let's finish there. Do you think yields should be higher on the prospect of inflation being sticky and tolerating more of it? Or should bond yields be lower at the lower end because of the growth risks associated with trying to achieve 2% inflation?
Yeah, so that all depends on what the Fed does. If the Fed tolerates 2 and something, as you put it, as my PIMCO friends and colleagues put it, there's no need to have a recession. There's no need to have bond yields collapse, right? And I could see bond yields staying here going higher because we also have a supply issue, as you know, from the fiscal side.
Mohammed, final question. We've talked about this over the last couple of weeks together. The Federal Reserve, you said 25, they're going to hike. They're going to hike. I've played fair. I've said, you know, based on the information we have so far, we've still got CPI still to come. Where are you now?
So I thought your final question would be Manchester City versus Inter Milan.
I was going to get to that, but let's finish here.
So your final will be that?
That'll be my final once we've dealt with the market and the bond market stuff.
Look, it's very hard to project something different from what they've guided to. If they end up doing something different, John, their credibility will be hit. So the market, you saw the market is probability of a hike next Wednesday is down around 20%. It used to be 70% before they guided us to the skip. So, you know, the Fed now has got to deliver that. And its big hope, everybody's hope, is that the inflation data comes in well below the consensus forecast.
Was that yes to a hike?
No, they're going to skip now and hike after that.
Okay, so July for a hike. Yes. Okay, so the final, City or Inter?
No hesitation, City.
Okay, there we go. That was easy. That's why you wanted an easy one at the end. Mohammed, it's good to see you. Good friend of this program, good friend of ours. Mohammed Al-Erin there on the latest. Your equity market a bit softer through most of this morning to basically unchanged, now turning positive as we get closer to the opening bell. Let's get you some movers. Here's Abby.
John, let's take a look at a couple of the stocks that are helping the markets go closer to even, maybe even a little bit higher, and the S&P 500 higher on the week coming into today. Tesla is having its best day since the end of March, up 6.2% on the news that GM will start using Tesla's extensive charging network beginning in early 2024. Plus, GM will adopt Tesla's connector. This is Tesla's highest level since early October of last year. GM also higher, up 4%. And then take a look at DocuSign, up nearly 7%, jumping on a 32% adjusted earnings beat. Sales were better by 3%. The revenue forecast was better, but many analysts see it as conservative. Net, we've got some big winners here, so let's see whether or not it can pull the indexes around, John.
Abby, thank you. Coming up on this program, investors looking ahead to the Fed as markets enter new territory.
I think that it gets pretty choppy from here, but the demand-supply balance still looks, constructive. So I would say a grind higher, 4,500 by year end. Soft landing will easily give you 5,000.
If we get a soft landing, Binky Chowder there of Deutsche Bank. That conversation coming up next.
Most of the large Chinese technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China, of the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general, but the best ones we have seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
At the Fed are on Bloomberg.
Right now, if you had to tip the scales, the next move is going to be an increase or a cut. It's pretty heavily weighted to the increase for me.
Nobody covers the Fed like Bloomberg.
They haven't dealt with the larger framing issue. And you're not going to get me to front-run my FT article again. We'll have to wait till Monday. But there's a larger framing issue that is not being looked at. So how they describe that the skip, which the market expects, is going to be critical. Now, if they don't get favorable inflation numbers, they're in a really hard situation because they will have to surprise the market. So it's going to be next week is going to be absolutely fascinating.
Next week is going to be absolutely fascinating. Mohammed Al-Erin of the Federal Reserve looking ahead to next week. CPI on Tuesday, Federal Reserve after that. If they skip, will they go 25 in July? Lots to talk about. Kit Jukes of SocGen saying this morning. Have we become ostriches with a short-term memory of 10 seconds and a tendency to head off in one direction or another at full speed for reasons we can't remember? Daryl Crocker, Wells Fargo, Morgan Stanley's Michael Kushner. Join us now for more. Michael, have we got our head in the sand?
We seem to be bouncing around from one extreme to the other. We're optimistic, we're pessimistic, optimistic, pessimistic. I think that relates to the fuzziness of what's going on in the world. We're in this transition. Manufacturing is weakening. Service sectors are strengthening. Labor markets are changing around. Got strength in some sectors, weakness in other sectors. It's very obscure in terms of what the actual fundamental underlying trends are. So I think we do have a tendency to bounce around in terms of what we think is going on.
Got a lot of history to look at. Darryl Cronk, you wrote this. History shows the S&P 500 doesn't bottom until, on average, 6 months after the first Fed rate cut. That rate cut's not coming anytime soon. At the same time, Bank of America published, Darryl, just moments ago. Let me share this one with you. The bear market is over. 90% plus at a time. The S&P 500 rises over the next 12 months after recovering from a bear. So history cuts both ways here, Darryl. Which one's which?
Yeah, it does. I think the conditions, though, are vastly different this time. And to your earlier question, I think the market's having a little bit of a summer fling that ultimately ends in heartbreak in the fall as those conditions just keep tightening. The leadership, as you know, is too narrow. I mean, now at the end of May, if you took out the 8 stocks, the index was negative. Now you have to take out the 20 top stocks in the index to get negative. So the breadth is widening. That's positive, right? But you still have 6 of the 11 GIC sectors in the S&P that are negative year to date. Large has outperformed small by 500 basis points, so you're not getting any leadership out of small cap at this point. You should be if this is a durable rally in the next bull market. So the signs are just not there. And frankly, the VIX at 13 and change, implied volatility is just way too low heading into whether it's next week or the summer months. Quite frankly, we think investors should be using that low volatility right now to hedge for that potential heartbreak that may come later this fall.
Well, Darryl, the point that you're making is it's time to get defensive in stocks. Does that translate as a wholesale cutting back of your equity allocation or just getting more defensive sector-wise?
I think it's a little bit of both. We've been underweight equities in portfolios basically since last year, which served us well in 22, hasn't served us well so far in early 23. But I think you want to look where you can find value. So I think energy down 7%, most energy stocks trading at 9 times multiples with a 3% dividend yield, to me looks more attractive than other cyclical areas, places where you have the best to worst technology, best energy, worst dispersion of 41% year to date on sector over sector performance. So we think energy is okay. We think healthcare is good. We would fade probably some of the tech, discretionary, and communication services. They're all up 30% plus year to date.
Massive moves year to date on that front. There's an old cliche that capital goes to where it's treated best. And Michael, I'd be asking you this morning, does it get treated best in equities or in bonds at the moment?
It's a good question. I think bonds are very competitive with other asset classes, equities or others. The high yield market, people will go, if a recession is coming, why is high yield so reasonably well behaved? And the reason is you get 8 to 9% yields in high yield in an economy which is doing okay. And an 8 to 9% yield, if there's not going to be a meaningfully large recession, how are you really going to beat that in equities or other components of fixed income? So I think that like the high yield market is being held up quite strongly by the fact that people like yield, and yield is high now, even if spreads are not so high.
Michael, you've got all these opportunities in fixed income that you've just suggested. You've seen what's been ripping in the equity market. I'd be asking 5 trillion questions. Why have we got $5 trillion sitting in money market funds if opportunities elsewhere are that good?
Well, I think this is the reason to be optimistic that even if we have a bit of turmoil in the economy, as long as it doesn't get too weak, the supply-demand imbalance about these financial assets that are sitting on the sidelines, which could be deployed in financial assets, whether it's bonds, mortgages, high-yield credit, or in general, or equities, is out there. So I think the longer we go without a recession, and now we're 15 months or so from the tightening, the S&P has come almost unchanged over 15 months. The 10-year Treasury is unchanged basically over the last 15 months since June of 12 months since last year, that people get sucked into the market. And I think as opposed to potentially having a lot of volatility over the summer, we could have a surprising melt up, in asset prices this summer.
Oh, some opposing views there. So let's build on that a little bit more. Darryl Cronk, if people are going to sit in cash, and many people have done, they're trapped there, being rewarded to be trapped, you get 5%, I know that, but elsewhere things are ripping. Just how sticky is that money? And what's the catalyst, Darryl, for that money to start being deployed elsewhere?
Yeah, it's a good question, John, and one we spend a lot of time in strategy committee looking at. I would say, what I think could surprise to the upside, to that point, is even next week. So you're going to have the headline CPI drop a full point from 5% to basically 4% if we hit consensus. And the 3-month average on inflation is 2.2% at the headline. The problem is the core is still running at 5.3 and the 3-month average at 4.8 and still rising, way too high for the Fed, right? So I do think the Fed has to do more work later this year. The reality is the economy is at basically stall speed. We're at 1.5% GDP growth. That is that is not enough cushion when you've got the fastest tightening cycle since '81, and 7 of the last 9 Fed tightening cycles have ended in recession. So we still think later this year the true data and dynamics play out and the economy does drop into recession. We're already there on earnings. We've had 2 quarters in a row of negative growth. Leading economic indicators are in recessionary territory. The data just doesn't suggest otherwise at this point.
How would you suggest the winners of the moment would perform in the downturn that you're anticipating? What would happen to Nvidia? What would happen to Meta?
I think they have to come down here. I mean, look, they're up 70+%. I mean, it wasn't that long ago, John, we were writing about a crypto bubble and a cannabis bubble, right? You could argue that there's some AI bubble-ish tendencies here of what's playing out right now in the latest move. Technology has done well, but as I said before, if you get below the surface and I take out those top tech names, the vast majority of even the S&P 500 technology sector is still off 20% from its previous 52-week highs. So even the tech sector broadly below those names is not participating as widely as it should, again, if this is a durable, sustainable, broad-based rally.
Darryl Cronk, Michael Kushner, to the two of you, thank you. Going into the weekend. Enjoy the weekend, gents, and let's hope today is a quiet session going into a busy week next week. Coming up, the morning calls, and later we'll catch up with Alpine Saxon Woods' Sarah Hunt, joining us around the opening bout and taking a look at Tesla too. That stock doing better than good this year and doing okay this morning too.
I don't think we can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Month to date so far, big outperformance in the Russell. So far in the session, bit of underperformance. We're negative there and slightly positive on the S&P 500. That's the price action. Let's get you some morning calls. First up, Piper Sandler raising its price target for Oracle to 130. The analyst citing favorable AI and cloud tailwinds. Next up, Guggenheim cutting its price target for Nike to 135, expecting slower than expected China recovery to weigh on earnings. And finally, Citi, more than doubling its price target for Carvana to 25, playing catch-up, highlighting the company's improved outlook amid a stabilizing auto market. That stock at 25.47 and positive 5%. Coming up next, another win for Tesla's Elon Musk.
you thought maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From business's most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Heading towards a fourth week of gains on the S&P 500, potentially the longest weekly winning streak of the year so far. On the Nasdaq, slightly negative on the week, and on the month, only up by a little more than 1%. So as we assess the bull market from the lows of October and talk about this narrow leadership, keep an eye on where the recent outperformance has been in a Russell. The Russell up on the month by a little more than 7%. There's your opening bow. Switch on the board and get to the bond market. A bond market that's been squeezed, whipsawed by developments over the last couple of days. The Central Bank of Australia, then Canada, surprising with rate hikes, sending yields higher. Then we had a little bit of soft data in America. Jobless claims disappointing, flying higher. The wrong kind of upside surprise on claims, driving yields lower. This morning, yields up again by 3 or 4 basis points, going into a busy week next week. 375.68 on a 10-year, on a 2-year this morning. We look at it of something like this, up 5 basis points to just north of 456. That means the dollar showing a touch of strength, the euro some weakness, 107.69. And look out below on crude, just about holding on to 71 here. We're down by 0.2%. For the broader equity market, about 40 seconds into the session, we drift higher on the S&P by 0.3%, on the Nasdaq up by 0.5. The one sector to watch at the open, EVs. Tesla shares climbing for an 11th consecutive day thanks to GM's agreement to join the company's charging network. The GM CEO, Mary Barra, writing in a statement that the partnership could, quote, help move the industry towards a single North American charging standard. Ed Ludlow has more. Morning, Ed.
Yeah, currently headed for 11th straight day of gains, as you point out, John, matching the streak that Tesla hit in January of 2021. I don't often do this, John, but I'm going to get technical because I look at this stock. RSI has just hit 86. We're trading above 200, 150-day moving averages. Just the momentum's there, but how long does this last is the question. In terms of the details, from 2024, General Motors EV owners will have access to the Tesla Supercharger network, around 12,000 additional chargers, but they will have to use an adapter. Starting in 2025, GM will modify production so that the EVs they're building have a North American Charging Standard, or NACS, port, making it easier. Of course, this is a move that Ford has already announced, and reading the sell-side reaction, industry participants and sources that I know, this is now relatively definitive, right? You have the three biggest US-based makers of electric vehicles adopting this standard. The assumption now is that the rest will follow, and that those operating charging networks with CCS standard, you look at names like Electrify America, EVgo, and ChargePoint as examples, they now have to think about what they're going to do in order to remain competitive. But Tesla, wow. Tesla now changing how we think about it in some ways, but the stock up 6%, 11th straight day of gains and trading at its highest level since the first week of October.
And not just Tesla, Ed, but GM, General Motors as well. Ed, can we just sort of sit on this for a moment longer?
Please.
What a win this is for Elon Musk and Tesla. Frozen out of talks at the White House when others were going around cozying up, talking about GM, Ford, Mary Barra, very close seemingly with the President of the United States. And then this is the industry, this is the individual setting the industry standard for everybody else. And how much of a win is this for Elon Musk?
Yeah, look, I started reporting on Tesla in 2018, and it's completely fair to say that since that point, everyone, whether you are a competitor, a Tesla employee, an investor, or an analyst in this field, they accept the technological leadership that Tesla has, both on the sort of product vehicle side, but also the charging infrastructure. Tesla moved quickly and invested heavily in charging. Now that is starting to pay dividends. I also would point out, John, how this came about. Mary Barra broke a seven-month silence on Twitter, tweeted it, and then did a Spaces with Elon Musk. And it makes you think about, the kind of position that Elon Musk and Tesla are in how they're engaging with their industry peers.
Just a big win in a big way, and doing it on his platform, as you suggested. Ed, thank you. Ed Ludler there on the latest. Dan Ives of Wedbush adding Tesla to the best ideas list as if it wasn't there already for him, raising its price target to 300. I'm saying this, quote, "We believe this is a large monetization opportunity. In a nutshell, Musk and Tesla are playing chess, while other automakers are playing checkers in this broader EV green tidal wave." That stock is up by almost 6% and higher by close to 100% year to date. Just a phenomenal run in 2023. I want to stick with the autos. Carvana extended gains following a record one-day advance. Bloomberg's Abigail Doolittle has more. Hey, Abby.
Hey, John. Well, it is really pretty amazing because this stock is up 12% after that 56% record climb yesterday. Over the last several weeks, 9 days are comprised of days that are up more than 10%. So huge gains. But what's so interesting, on the week, the stock up 70%. It's only the best week since early February. That speaks to the volatility, and a lot of the volatility has to do with the shorts. There is a 51% bearish short interest on this stock. And if you take a look at the shares from the peak, they're down about 90%. But from last year's low, they're up 600%. Again, speaking to the volatility yesterday and recently, the shorts really getting killed in this. And of course, has to do with the fact that EBITDA outlook for the current quarter of about $50 million, much better than the projected loss, helping folks, investors, become a little bit more comfortable with the idea that this company, this online car company, is cutting costs and maybe turning a corner.
The surprise being they might actually make some money, some EBITDA, some profit. Abby, thank you. We're up by 11% in early trading there, adding some more weight to the recent rally for Carvana. Turning to retail, what a struggle it's been for Target. Under pressure as Citi cuts the stock to neutral. The analyst saying slowing sales and traffic piling up. Target's high exposure to discretionary sales will not serve them well in the current macro backdrop. Katie Greifeld has more. Hey, Katie.
Hey, John. Well, slowing foot traffic, tough competition. It's a toxic combination for Target, at least if you ask Citigroup. The bank's traffic tracker data showed that foot traffic slowed in the last week of May, and then it slowed even further in the first week of June. That led them to this downgrading Target to neutral from a buy. And making matters worse, of course, Citi here sees Walmart gaining market share. Like you mentioned, Target does have that high discretionary exposure that's not great in this environment that we're living in of slowing growth and still high inflation. Now, of course, this downgrade follows a pretty brutal stretch for Target stock. If you look year to date, it's down about 12%, down 16% just in the past month or so. But Citi says the risk here is for further downside, and you're definitely seeing that this morning. Shares off about 1.8% at the moment.
Casey, have you noticed that the South Side are very willing to talk about the product mix at Target not being favourable to the stock, but less willing to talk about the elephant in the room, which is the tension between them and the LGBTQ community?
You have seen that a little bit. It kind of makes sense here that they're sticking just to the product mix, but those social issues, very, very much, if you look on social media, it's a different story.
Dominant at the moment. That's the dominant part of the conversation. Katie, thank you. That stock is down by about 1.7%. Really weak run over the last few weeks, that's for sure. Also looking at DocuSign, shares jumping after the company beats Q1 earnings. The CEO writing in a statement, quote, "As we continue to execute on our strategy and leverage our competitive advantages, notably in, guess what, AI, DocuSign is well positioned for the future." Isabel Lee has more. Hey, Isabel.
Hey, John, it looks to be a great day or a great start for DocuSign. Shares rose around 10% when the market opened and now has since pared gains to around 4%. Year to date, it's up 10%. So it's a beat across the board. Revenue jumped 12% year over year and increased by the same percentage in the subscription side. Adjusted EPS rose to 72 cents. That's compared to the 38 cents year over year and the 55-cent estimate. The company announced a slew of new products and services, and many analysts were bullish. They said that they were impressed, and Wedbush, again, also increasing its price target for the company. Some, however, didn't think that it was that impressive when it comes to their outlook. They thought that it was a bit conservative.
Stock up 2.8%. Isabel, thank you. I think Lisa called that a pandemic darling a little bit earlier on this morning. A few of them doing well. Thinking of Carvana the last couple of days too. Your broader equity market positive by 0.2% this morning. We've heard a lot from the bulls.
I think that it gets pretty choppy from here, but the demand-supply balance still looks, constructive. So I would say a grind higher, 4,500 by year end. Soft landing will easily give you 5,000.
We've also heard a lot from the bears. Bank of America's Michael Hartner writing, quote, Q1 recession fear replaced by Q2 Goldilocks greed. The S&P 500 breaking out bull market bubbly, though he stresses that if you have a look at how things progress through May, you take out a magnificent 7, and we're up more than a sober 1% year to date. The Fed ain't done with hikes, so we stick with sell the last rate hike call. That's his call, stays bearish. Michael Hartnett of Bank of America. With us now for her perspective, Sarah Hunt of Alpine Saxon Woods. Sarah, is this a market you want to chase or one you want to run from?
It's such a difficult question, and I think that this is what everybody is struggling with right now. I think part of the move in the Russell has been a bit of a catch-up, so everyone's buying the laggards because you've seen the S&P move ahead, again, in a very, very narrow way. I think it really is going to depend on how that CPI data comes in next week and what the Fed does. But you're facing a bunch of tailwinds that are coming for companies, which is partially on the earnings front, because if you do get that drop in inflation that people are hoping for, that means the Fed can slow down or even, pivot, which we're not even talking about anymore. It means that you're going to see some degradation of earnings because some of that earnings bullishness has come on the back of inflation and not driving revenues higher. You also have some issues coming in with spending, with student loan resumptions. And I think you're just going to start to see some issues on the consumer side. And I think some of the weekend of that you're already starting to see in things like Dollar General.
So, Sarah, have you got your doubts about the outperformance we've seen so far this month on the Russell? It's pretty big outperformance. The small cap's up by something like 7% plus. The Nasdaq, despite the headlines, which cover what's happened since October, the Nasdaq over the last few weeks hasn't really done it.
Well, I think there's somewhat of a catch-up here because the small cap stocks had not had any sort of recovery. So I think to the extent that people are looking at the economy and saying, well, maybe it isn't going to be a terrible recession or a deep recession, or maybe we're just going to get a slowdown, that's positive for the stocks in the Russell 2000 because they're mostly domestic facing and they should see some growth if the economy isn't terrible. I think the bigger question is overall market and some of the multiples that we're moving to, where do those stocks go and what does the Fed do? And how long do we stay at higher elevated interest rates? I think that's going to be a big part of the question of how equity markets can perform over the next 12 to 18 months.
Well, let's talk about where the surprises have come from, Sarah. The labour market is so much stronger than we thought it would be at this point of the year, looking back, say, 12 months ago, looking out 12 months. The housing market is so much stronger in the face of 5% Fed funds and 7% mortgage rates, given that still, as far as I'm told by places like Redfin, a third of purchases in this country are being done all cash. Are we finding out, and I asked this question to Mohammed about 40 minutes ago, are these long and variable lags a whole lot longer, or are we just finding out this US economy is a whole lot more resilient?
I think it's a combination of the two. I think it has to be an and. Part of the issue on the housing front is that you don't have a lot of people in existing homes willing to sell those homes because their mortgages are so low. And to the extent that so many people are buying with cash and developers are able to offer some sort of incentives to get people into brand new home sales, I think that's part of what's driving the home market. But that's still bullish for the home sellers, right? So that's a good thing for them. On the labor side, you did see one increase in jobless claims. 1 week is too short a period of time to even try to extrapolate that data. But I do have to think about when I go through places like the new LaGuardia Airport and everything is a kiosk and there are very few people working in some of those retail stores, if that's going to be the new way that companies goose margins, which is making sure that they have the least amount of employees possible. I am a little bit concerned about that going forward, but I think we just have to see how that plays out.
Sarah, given everything we've just said, favourite sectors right now, what are they?
I know this is going to sound like a broken record, but we still like energy. It's had some issues going forward. They're still releasing oil from the SPR. You would think that with oil prices down this low, they wouldn't be doing that. I think that there are some things that are going to reverse that are positive on the supply side, that even if you don't get a major cut from Saudi, or the fact that you've got more Russian crude on the market than we thought we would have, you're going to have a reversal of some of the ability of countries to keep pulling oil out of those strategic reserves that they have as well. And I think that you've seen almost a trough in gas prices. I don't want to call that here. It depends a lot on weather. But the U.S. has definitely got a different dynamic going on than Europe does on the energy front. And that's been favorable to consumers so far this year.
Sarah, why do you think it's so out of favor in 2023? This trade did so well the previous 2 years.
I think partially because it did so well the previous 2 years, partially because people are still looking at that ESG component and saying, you know what, hydrocarbons are going to go away. Well, there's going to be a transition, but that transition tail is going to take a lot longer than a lot of people are expecting. So a lot of the companies that people have given up for debt are not really going to die, especially not in the next 5 to 10 years. And I think that that's an important part of the global conversation that we need to be having, because you look at countries like Germany that are stuck with higher energy prices for longer because of choices that they made in the last several years to get rid of some of their conventional energy supply. And you have to think that that conversation has to be more broadly based, and you have to think about all the different pieces of that puzzle.
Sarah, just to finish then, can you describe the type of energy company you want exposure to? Not all companies, as you know better than me, are created equally. Where do you want to be? Where don't you want to be?
Well, I think that right now we see some positive momentum for the service sector. If you really are troughing on the rig count, you've got some U.S. service stocks that can do well. I think that there are places that play into some of these transitions like LNG. I've mentioned Chart Industries before. I still think that that's got some really good possibilities going forward, because you are going to see a larger grouping of LNG companies do better going forward. Some of the majors are more involved in that than others, and some of the majors are looking at alternative fuels more than others. And I think that trying to pick and choose within those is really where you want to be looking in the energy sector right now.
Sarah, does it matter who's in the White House? I ask that question because think about who's in the White House right now and how well energy has played out through his term.
I think it matters in terms of policy directionals and longer term, right? Energy stocks tend to trade in waves, and you try to catch them when they're down and get rid of them when they're up. Well, we're back down to energy being 2% of the S&P right now versus the 6 or so that it was just recently on the run up in energy prices. I think the longer term policy directives matter, and I think whether or not you can get permit reform and some of the other stuff that has been talked about, I think that does matter. But it doesn't matter if you're in the middle of a long cycle one way or the other. It's not as important who's in the White House, but it is part of the longer term consequences.
Sarah Hunt, thank you on the latest. Still likes energy this morning, a little bit softer. Sarah, have a good weekend. It's good to see you. 15 minutes into the session, equities positive by 0.4%. The outperformance again on the NASDAQ. Coming up, the politics. Former President Donald Trump indicted.
It's election interference at the highest level. I'm an innocent man. I'm an innocent person.
That conversation up next.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. From the Wizards and Capitals to new ventures and innovative investment, running a sports empire in Washington, D.C. is a monumental task. Owner Ted Leonsis trusts CFO Peter Bichet to execute monumental sports and entertainment's financial game plan.
We are definitely in growth mode. What else can we do? How do we grow the platform?
Watch Chief Future Officer, Wednesday on Bloomberg. From the world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power. Live from Bloomberg's Washington. Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on that folks are so excited about it. Climate tech is the hottest area to be in.
It's election interference at the highest level. There's never been anything like what's happened. I'm an innocent man. I'm an innocent person. And we will fight this out just like we've been fighting for 7 years. It would be wonderful if we could devote our full time to making America great again. And that's exactly what we did. But now, again, our country is in decline. We're a failing nation. And this is what they do.
According to three people familiar with the matter, the former president indicted over his refusal to return classified documents found at his Florida home. A former president has never been charged with committing federal crimes.
Trump's not the only person that's took records home with him. There's kind of a broader historical question about how these laws were enforced, and you know, President Trump is trying to make a case that both there's different treatment here for him, as well as a situation where these laws were never enforced in the way that the Justice Department is proposing to enforce those laws. You know, those are both questions that the Justice Department is going to have to answer as this case moves forward.
We get lucky this morning in New York. Bloomberg's Anne-Marie. AMH, where are we going with this?
Well, he's been indicted, Jonathan. This is according to the reporting that's out there, including in Bloomberg News. And obviously, everyone's talking about what happens on Tuesday, because then he'll have to show up to court. And this is being handled in Miami. What we do know from this indictment, and we could get the document released as early as today, the former president faces 7 charges. They contain willful retention of national defense information, corruptly concealing documents, conspiring to obstruct justice, and making false statements. Jonathan, some of these allegations could mean the former president could face 10, even 20 years in prison. Now, obviously, he is a former president. No one thinks that he potentially could face this kind of time behind bars. But these are serious, serious issues. His own attorney general, Bill Barr, leading up to this indictment, had said that this is going to be the hardest case for the former president, given there's a lot of legal challenges around him now. And he almost also said it's of his own doing, because he was there, in Bill Barr's words, jerking around the DOJ when all they wanted was these documents back. And the former president, we saw that in the raid in Mar-a-Lago in August, was not giving them back. And there had to be a subpoena, and then they had to go take them.
Could you build on that, the difference between what's happened here in this case and what's happened elsewhere, when we've heard tons of stories of current officials, former officials, who have done something similar, taken documents they shouldn't have gone home with? That's
right. You have the former president's own vice president, Mike Pence, had documents taken home. He called the authorities. They came, took them, and now that case is done now, and that they're moving on from that. The current president as well, Joe Biden, had documents found as well in his home and his office. They called the authorities. Authorities then came and checked all of his properties and took those documents. There's a special counsel right now facing the current president, Joe Biden, that is still pending. The difference is obviously Pence and Biden both called the authorities and wanted nothing to do with these documents, knew that they had to go back to the National Archives. The former president, what many believe he was doing, was hoarding these documents. There was a subpoena to go get them, and he would not give them up.
AMH on the latest. When we get more facts, we'll bring them to you on Bloomberg TV and radio. Anne-Marie, good to see you here in New York, of course. 22 minutes into the session, call it 23. We're advancing by about 0.5%. The Nasdaq is where the outperformance is this morning. Abby has more. Hey, Abby.
Hey, John. Well, it certainly has to do with those big tech sectors, really to the upside. And on the week, the S&P 500 higher for a fourth week in a row, the longest weekly winning streak in almost a year, well, since August of last year. But take a look at consumer discretionary tech and communication services, all higher to the downside: materials, energy, and utilities. Let's take a look at a theme that is just really the big theme this week, which is, and the month, to your point, is the Russell 2000 really outperforming, up 2.5% to the Nasdaq 100, up 0.7%. This doesn't quite illustrate the degree of the spread there, but nonetheless, we have outperformance for small cap.
Abby, certainly not the story of the year anyway. The story of the week, the story of the month. Abby, thank you for that. Outperformance on the Nasdaq, the S&P 500, a clean break of 4,300.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
This is Bloomberg.
As you were, the outperformance on the Nasdaq returns on the S&P 500, clean break of 4,300 on the S&P, the highest since April 21, 2022, a new high for 2023. That's the price action. Here's the trading diary. UBS could complete its Credit Suisse takeover as early as Monday. US CPI Tuesday, PPI Wednesday, the Fed chair Jay Powell holding a news conference after the Fed decision on Wednesday. Then on Thursday, an ECB rate decision. On Friday, it's the BOJ's turn, followed by UMich consumer sentiment to round out the week. That rounds out a week for me. Enjoy the weekend. This is Bloomberg.
most of the large Chinese technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China, the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general, but the best ones we have seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stenivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
898, I won! Look for the winning number in sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking, and of course Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.